Good morning, everybody. Welcome back to another episode of the Market Open. We are a little red in the pre-markets, just a little bit. Maybe a little bit more than a little bit. And it looks like we're going to be ending off a week as we head into the long weekend with potentially some more pain than I think some people expected. And that is because we got a tweet by Mr. President Trump this morning. And, well, it's not really the best tweet. So what's going on right now? Let me pull this up real quick. And then we got Austin Goolsbee, who's a Fed president on CNBC. We'll go to him and see what he's trying to say because he reacted to this in real time. President Trump has said this morning, I'll just read the whole tweet. The European Union, which is formed for the primary purpose of taking advantage of the United States on trade, has been very difficult to deal with. There are powerful trade barriers, VAT taxes, ridiculous corporate penalties, non-monetary trade barriers, monetary manipulations, unfair and unjustified lawsuits against American companies, and more have led to a trade deficit with the U.S. of more than $250 million a year, a number which is totally unacceptable. Our discussions with them are going nowhere. That's not good. Therefore, I am recommending a straight 50% tariff on the European Union starting June 1st, which is 7 days from now. There is no tariff if the product is built or manufactured in the United States. Thank you for your attention to this matter. Yeah, so the markets obviously did not like that. So that tweet, we'll talk more about it. It obviously got, markets to think, hey, maybe this tariff volatility is not over. We went through it in April. Maybe it's still going to be pretty aggressive, especially if we're having to deal with the EU. And then not only did we get an EU tariff, your boy Tim Cook is seeing his stock go down 4% because then Trump tweeted this. I have long ago informed Tim Cook of Apple that I expect their iPhones that will be sold in the United States of America will also be manufactured and built in the United States of America, not India or any place else. If that is not the case, a tariff of at least 25% must be paid by Apple to the U.S. Thank you for your attention to this matter. This is why the pre-markets are looking rather ugly. And what do I mean by that? Well, Robinhood down 3.6, Tesla down 1.7, Nvidia back below 130 at 129, down 2%. Palantir is below 120, down 2%. SoFi 1278. Google had some momentum, got to 175. Now it's back down to 168. Grab cannot hold $5 if this type of volatility is gonna be in place. Coinbase down 3.4, Apple 194 down 3.35%. Even Bitcoin could not take this volatility. It was at 112 yesterday. Now it's at 108,000. So obviously it's creating some problems in the broader market. HIM's right here down about 2.56%. The S&P is back at 574, down 1.4%. And the Qs, the NASDAQ was at 514 yesterday. It is at 504, down about 2% here right now as well. So yeah, that's what's going on. Dude, I woke up, I did not expect this. And I just I saw all these Robinhood notifications of everything's down. I'm like, what could it be? What could it possibly, what actually could have happened in the past 24 hours? We had the whole Moody stuff. We had the bond auction, but then we had all this AI momentum, all this good news. We had good earnings over the past couple of days with some of these big retailers. It's like, what could it have been that created all this pain? And then I see, we're threatening the EU with 50% tariffs. And so that's what we've got going on. So here's my take on it. And then I want to get to Goolsbee and then we'll analyze this even more. Goolsbee is on CNBC. He's a Fed president, and what he says about inflation and kind of the tariff volatility, because he was on CNBC when this news broke in real time. And this is important because the reason the Fed's not cutting rates is because they are afraid of something like a 50% tariff that they believe could create more pain. And getting his perspective on how the Fed is kind of navigating what Trump says, I think is also going to be really important. Here's my take. Some people might not love my take, but this is the take that I have right now. I reserve the right to change my take, but realistically, after reading these tweets in the morning, the initial gut reaction I had, and let me know if you agree with my take or not. I think this is a buy the dip. I think we just saw this play out in April. Trump proposes something super aggressive, causes a ton of volatility, then saves the day and ends up with something that's not as bad. We literally just saw this with China. If he's proposing 50% on the EU, he probably wants to get them to give up some concessions. He literally said negotiations are going nowhere. So guess what? He takes out his phone, takes out his Truth Social, and he says something because he's upset in order to get their attention. He probably wants to bring it down to like 20% or 25% or 15%, but he's saying some egregious number to get people's attention. I mean, we literally saw this happen with China, where he gave absurd tariff rates publicly, 145%. And then guess what? He walked them back. He walked them back in so many ways. First, he walked them back by saying iPhones will be excluded. So Apple stock went up after he said that. Then he walked them back with that 90-day pause. Then he walked them back by saying 145 goes to 30%. So, I mean, yeah, art of the deal, I get whatever you want to call it, but I just do not think he's serious about this. And the thing that's different this time than it was last time, the institutions missed the rally in April. And the institutions, if they learned anything, and I don't know if this is going to be correct, but we'll see how it plays out. If all of retail was like Trump is just being Trump, and this is going to eventually go back to normal, and we bought the dip, and we ended up being pretty accurate about that, the institutions sold that dip because they didn't understand that kind of psychology with Trump. If the institutions are smart enough to now realize there's no way in hell he's actually going to do 50% on the EU, like this is one of our biggest partners, we're not going to do that. Maybe all the institutions say, finally, this is what we've been waiting for, something stupid to happen so that we can buy NVIDIA back below 130. So we can try to get, Palantir back in the low hundreds or maybe below 100 if it actually gets that bad. And as a result, if it's the same thing over again, then it might be another dip, especially for the institutions that have been waiting on the sidelines for any meaningful dip, because obviously they missed the entire rally from April and basically the entire rally in May as we got the S&P 500 back up to 590. So look, I don't know. There's a lot of money on the sidelines. I really don't think we're going to be tariffing the EU 50% at all. And as a result, yeah, we might see some real pain in equities. NVIDIA's at 129 right now. Maybe it goes to 110. Maybe it goes to 105. Maybe S&P at 574. Who knows? Maybe it gets back to 550. That would be a full 5% retracement from yesterday. So, I would not be surprised to see that. But I also think if Moody's couldn't tank the market, if the 20-year bond auction couldn't tank the market, if Japan's 40-year reaching new highs couldn't tank the market, what could at least create a 5% dip in the market? Maybe it's more tariff volatility. And maybe that's what the institutions are looking for as well. So those are my thoughts. We'll talk more about it. I'm sure throughout the day, we're going to see some different headlines. Intraday, I think there is a world where we could see a little bit of of the market saying, we're going to buy this dip. And if we do see a buy the dip throughout the day, that would be incredible. The question is just going to be how it plays out. And, at what point does the market say enough is enough? We are going to take advantage of this dip. All right, let's get to Austin Goolsbee. Let's see what he has to say about tariffs and inflation. He is, again, a Fed president. And then we will keep going from there.
Other 50% tariffs on the EU. And I'm just wondering how you as a policymaker react to this kind of changing environment when it comes to big economic declarations from the White House.
Well, we had the big Fed Listens event last week at the Chicago Fed, and a whole bunch of folks from the district came in to talk about the economy. And the two common themes were, number one, they hate inflation, and number two, they want some consistency. The CEO of a construction company said for them, we're now in a put your pencils down moment where they just have to wait if every week or every month or every day there's going to be a new major announcement. They just can't take action until some of those things are resolved. So it's not surprising that's the environment that we have been in, but it does just heighten the amount of, it's more than uncertainty, it's the non-consistency that for bigger decisions, the businesses are saying that they need to have some idea that it's going to be a constant that they can count on when making the investments.
So the uncertainty is one thing. What about what's being discussed? For example, a 50% tariff on imports from the European Union. Is that a big enough thing to be a macro factor to affect policy?
That sounds like, to go to 10% was going to be the highest tariff rate that we had on the world in 90 years. To go to 50% is a completely different order of magnitude. Now, at the Fed Listens event, and when I'm out in the district here, the Chicago district covering the Midwest is the most export and import trade tariff exposed district of all, including 4 of the top 7 highest exposure states. As they look at tariff rates that are that high, that would be really scary for the supply chain. But there was at this event an expression that maybe this is just a stepping stone, and that on the back end of this thing, we could get some new deals, we could open up some new markets. Maybe this won't happen. But if every few weeks we're going to get new and larger tariffs, there was a lot of anxiety that it's going to disrupt the supply chain and kind of take us back to an environment of rising costs like the ones we experienced in 21, 22, or even with the supply disruptions of 2020.
So not to be too reductive about it, Austin, but what does it mean for policy for you when it comes to, am I willing to cut? Am I willing to hike? Do I need to stay the same? How do you put all of this into the hopper and come up with essentially what is a binary decision for you?
If they did it's sort of two parts. In the short run, we got to just wait for the dust to come out of the air. If you throw a lot of dust in the air, everything's always on the table, but I feel like the bar for me is a little higher for action in any direction while we're waiting to get some clarity. And then over the longer run, if they're putting in place tariffs that have a stagflationary impact, which is to say they slow down output by raising the cost of production while also raising prices, then that's the central bank's worst situation. That is a stagflationary where both sides of the legal mandate get worse at the same time. So I think we'll have to see how big the impacts on prices are. I know
Goolsbee is not taking stagflation off the table. Again, Powell said the same a couple weeks ago. So this is the reason we're not getting a rate cut, folks, at least not in June. And July seems less probable as well. They are really concerned there is a world where we have stagflation, and they do not want to cut rates into that environment.
People hate inflation, and they've expressed that many times.
Yeah, Austin, a put your pencil down moment, the latest put your pencil down moment. I would think that the pencils might have already been down from what has happened since April 2nd, whenever it was. And my question was, I don't know whether we've seen the negative effects front and center from what you would have expected at that point. And I'm wondering.
I think that's an interesting observation, and it kind of goes to I've said on this program before. Remember, imported goods are only 11% of GDP in the United States. So there is a sense in which if we don't go wild, if it doesn't jump out of its 11% lane, it could be like 2018 where we had tariffs. They impacted the directly affected industries, but they didn't have a big macro effect.
I just wonder, is it still coming?
Hopefully,
or could
could
this cause it? Where is it? Is it still coming? Are we vulnerable to more shock that would definitely put us there, or is it it's going to keep the economy just keep on going?
Yeah, well, I hope it just keeps on going, and that we come back in a few months and say, hey, it was only stayed in its 11% lane. It didn't have that big of an impact. My only fear here, I shouldn't say my only fear. A fear here is, remember, the data come out with a lag. The price data come out with a 1 month lag. The GDP data come out with a 1 quarter lag. And so something might have already happened. And it's like watching last night's game on replay the next day. If you already know the outcome, you're not feeling that great about it as it's going along. So if we get multiple months like the last month where inflation is not accelerating, then I would definitely feel a lot better about it.
Hey, Austin, all of this news happening this morning, so we've completely changed the focus of what we would have been asking you about. Yields are down slightly this morning, but those higher yields that we've been watching all week, I just wonder how big of a concern that is for you, how big of a concern it is for the...
Okay, this is a big question. So yields are up on the 10, 20, and 30-year. Let's see what Goolsbee has to say, and let's see also if that means there's going to be less of a probability for rate cuts if these yields continue to be as high as they are, which, again, if the Fed cuts rates, that could somewhat help yields to get much lower.
The business leaders that you've talked to along these lines, if rates are going higher, regardless of what the Fed decides to do or not do, what you think about losing control of the long end of the curve, and what you think about what that means for the economy.
Yeah, each of those is critically important. Now, the market determines the long rate conditions. As you say, the Fed, we're setting the Fed funds rate. We're looking at the short end. The long end are the conditions in the economy, and those can be causes or those can be symptoms. To the extent that the conditions are getting tighter on the long end, that does affect investment decisions, consumer durable purchases pretty directly. So I would think, want to factor that in is there going to be slowdown? At the same time, if we're going to get a big fiscal stimulus that's pushing back the other way in the short run, we have to weigh off considerations like that too.
That's what I meant, Austin, when I started off about what news I was going to ask you about, because I was going to ask you about the fiscal side. What is your take, though? And I think it's in a couple dimensions here. The first is you just responded to, which is the fiscal impulse, the stimulus that might be coming from this bill. The other, though, looks to be a financial stability question about the ability of the U.S. to finance this. How do you approach both of those questions?
Yeah, look, those are both important. Once you become a sworn member of the Fed, you're out of the fiscal policy business. So I'm not expressing Congress and the president that can pass whatever tax policies, spending policies, fiscal side that they want. Our job is to look at anything that affects prices or employment. The law tells us that's our dual mandate. On financial stability, I do think that there's so far been a bit overblown in the discussions of whether the market accepts it. These are historically pretty normal interest rates. You would think that if there was truly a crisis of confidence in the U.S. as fiscal agent, that the rates would be well higher than where they are now. The fact that they're moving in a direction, it's best to take a long view. They're going up, but we've seen a lot of movement both up and down over the last year and a half. So I don't think we should overreact to that. The fiscal impulse, what does it mean for GDP growth? That's going to be determined by, well, how big is it and what's going to be in the bill? And so we're not political prognosticators either at the Fed. So I don't know exactly what's going to
Andy, let me just follow up on that real quick. So, Austin, we have this same question, and you've been given the same answer for like 6 months now. Was it the right answer? It probably was the right answer. Well, it's far enough in the future that you have a lot of fudge factor in there. In that, there were two cuts that were put together by the committee, the average of the committee, the median of the committee, when it comes to rate cuts this year. Where do you stand on that? And how does all of this stuff we talked about, changing fiscal policy, changing tariffs,
There's no way Goolsbee is going to confirm 2 cuts this year. I don't think he would say that, but let's see if there's any summary of economic projections he gives right now.
certainty of whether or not the tariffs are showing up in the data, where does all that put you on your outlook for rates?
I say, now, you know, I don't like even mildly tying our hands at the next meeting, much less over 6, 8, 10 meetings from now. That said, as we went into April 2nd, I believed that we're at pretty stable full employment, that inflation was on path back to 2%. And if we could do those, I thought that over the next 12 to 18 months, rates could come down toward a fair amount, toward where the let's call it the dot plot was saying rates would settle, which was a fair bit below where rates are right now. I probably got to modify, so now it's 10 to 16 months from now. But I still feel like if we can clear the dust out of there, that the underneath, the economy still has that strength that it had going into April 2nd. And if Joe's scenario played out, that it wasn't, that the tariffs and the uncertainty were not a threat to increase inflation, I'm still underneath hopeful that we can get back to that environment. And 10 to 16 months from now, rates could be a fair bit below where they are today.
I'm glad you modified that, Austin, because I was going to have to modify it for you if you didn't go down from 12 to 18.
Right.
Hey, Austin, I know you talked about sort of political prognosticating, but let me ask you, this is a political question, but it relates directly to what you do and who you are, which is the Supreme Court yesterday appeared to insulate you and your brethren, if you will, from being able to be fired by this administration and in any administration. The Supreme Court effectively saying that board members would have a greater protection against being fired by the president than members of agency leaders, in which case Trump has done that to other agencies. What was your reaction? Was there any conversation inside the Fed about that yesterday?
Look, I'm not a legal scholar, and the Chicago Fed, we weren't party to this lawsuit. You know my views. They are unanimous, pretty close among economists that Fed independence and central bank independence from political interference is critically important if you want to prevent inflation from coming back. So,
all right, that's what we got from Goolsbee. He obviously is not a fan of these 50% tariffs. And he's basically saying, hey, this is part of the reason why we're not cutting, and this is going to continue to be part of the reason why we can't effectively give you guys rate cuts. We just don't know what inflation expectations will look like going into the latter half of the year, given how volatile it is. We have an update from Volvo's CEO. He says we will need to pay a large part of price increases related to tariffs. He also says a 50% tariff will limit Volvo's ability to sell some cars in the U.S., obviously European brand, and basically that's one of the first public CEO reactions to these 50% tariffs that are beginning on June 1st. So Trump, if he's negotiating aggressively, if that's what we want to call this, he's giving them 7 days to give him a reason to not do these 50% tariffs. I mean, this is not like a month from now he's saying, this is like, hey, yeah, June 1st, today's May 23rd, these 50% tariffs are going to start. Kind of skeptical if they actually go live by June 1st. I mean, I don't know, dude. I think that's a little too quick. Granted, the 145% tariffs did go live, right? It's not like they didn't go live. They were in effect, even if they were in effect only for a couple weeks, but they were in effect, and they caused a lot of problems in those couple weeks. But it wouldn't also surprise me if he actually does unleash those 50% tariffs. Palantir right here, 1.7% down. NVIDIA, 2.78%. And then Hood, 62.38. All right, so here's a question for everybody. 76% of you said no, he's trying to get a better deal. 24% said yes, he's serious. So 75% of you are basically saying, hey, this is just Trump negotiating, and it's not as serious. Here's my question, or another question. Do we continue with the red worse than pre-markets right now? Or do we recover? Now, recover doesn't mean we go green on the day. Recover just means the pre-markets are the lows. So, for example, Robinhood at 62.40, that's the low for today. NVIDIA at 129, that's the low. And recover would say maybe NVIDIA's at 129.50. I know that's not like a real recovery, but you get my point, right? Like that the pre-markets are as low as it gets. People come in to buy the dip, even if that doesn't get stocks to go green. I would not be surprised, dude, if we go green today and people are just like, yep, this is stupid. This is not happening. We're going green. But given how explicit Trump is about these 50% tariffs and the fact that if you're a money manager, you kind of have to take it seriously, even though taking it as seriously as you did in April was the wrong way to play it. You kind of had to take it not seriously to look past that to buy the dip. I don't know how institutional investors are going to be thinking of this today. Some of them that are on the sidelines, 40% of them that are on the sidelines might be thinking, oh, see, we knew Trump was going to do this. It was right to be on the sidelines. And, maybe they miss a pseudo recovery. Other institutions might be saying, well, we knew something would happen that would give us an opportunity. Here's our opportunity. We're stepping in. Now, granted, is this really an opportunity? NVIDIA, instead of being 137, it's 129. I don't know if that's an opportunity per se. I mean, I would think if you're managing a lot of money, you want a real dip. But does that mean you kind of nibble in the dip today? Maybe. I don't think that's crazy if you've completely missed the rally and you haven't deployed any capital over the past 2 months. And so I think today at 9:30, when the market's open, we're going to get a better understanding of how this is playing out. The 10-year, let's take a look at that. 10-year, see, this is weird. The 10-year's down. 10-year's down. This is also another reason why I'm saying I'm calling a little bit of BS on this entire thing. 10-year, 4.471. The 10-year should be spiking because if we have 50% tariffs on the EU, I would imagine that creates a little bit of inflation. The 20-year also down 5.017. I mean, how are these guys up on a 20-year bond auction that, quite frankly, did not matter that much? But 50% tariff headlines are not going to get them to spike up, right? Like I don't know. It doesn't really feel like the bond market is reacting. I mean, I guess in 20 minutes when the market opens, we'll see if there's any other meaningful impact. But you would expect these things to spike in like quickly as soon as there's any announcement of 50% tariffs. Even the Apple news of 25% tariffs because they're going to India could have been a reason, I think, for the yield market to get upset, simply because of the idea that Apple is such a big company and that, you know, people buy a lot of Apple products. A 25% tariff on that obviously would create some level of inflation because Apple would pass that cost down to the consumer, but they're not spiking on that either. We did get $27 billion of money market fund inflows yesterday. So we did get some people leaving risk on assets and going to money market funds. We now have 6.97 trillion on the sidelines. 27 billion over the past week enter those money market funds. But in the pre-markets, they're also entering the bond market because the way yields come down is if people buy bonds. And it is counterintuitive to say, I'm going to buy a bond after Trump says he's going to tariff one of our biggest trading partners by 50%. But that's what's happening. And so to me, that's the bond market saying, we don't believe this. And that's the equity market saying, it might be true, but you know, you're not seeing NVIDIA at 120 or 115. You're seeing NVIDIA down 2%, which realistically is just not a dip. It's like, okay, that 2% is 2%, but it's not, you know, 10, 15%, anything that crazy. HIMS is under, where's HIMS? HIMS under 50. Are we there? No, HIMS at 52.36. That's down 2.17% as well. Even some of the most volatile stocks, again, 2% on HIMS is like nothing. Even 2% on Robinhood, that really is nothing. So we Palantir back above 120. I mean, I don't know, dude. At 9:30, we're gonna see if this market actually continues to believe it's that bad, or if we get any level of recovery here later throughout the day. We're gonna see. 58% of you say more red. 58% of you say we will see more red throughout the day. Now, this is a long weekend, and you know, in general, markets tend to sell off going into a long weekend because no one wants to hold stocks over a 3-day weekend based on what could happen. It is funny that Trump said this today and not on the weekend. He decided to basically mess up our weekend by saying this today. Could have said it's Saturday, and you know, that probably would have messed up our weekend as well, but we could have avoided eventually having to look at our portfolios until Tuesday. We're not going to get any futures on Sunday either, so we're really not going to get anything until Tuesday or until Monday night. And yeah, it's from that perspective, he decided to kind of mess up this Friday. If this Friday continues to go as red as it is right now. The headline for those that are just joining, Trump is planning 50% tariffs on the EU. Even the way he wrote this, bro, again, it just sounds like it was with China, like China bad, me increase number on tariff, and then market reacts. And I just feel like we've been through this story literally a month ago. And the people that took the story that seriously, they didn't buy the dip. And those who didn't, they bought and they were rewarded. And I don't know, 4,800 on the S&P 500 again. Like, I just don't see that. I don't. Bessent's going to be live today as well. I don't know if Bessent knew that Trump was going to tweet this, but Bessent's probably going to have to try to talk and justify this. And I think Bessent is going to have to, you're going to have to read between the lines. And Bessent's basically going to be saying, dude, we're negotiating. Like that. I really feel like that's how, but I don't think Bessent's going to defend 50. Bessent is not a tariff fan. For those that know his history with Soros and Druckenmiller, like he doesn't like tariffs. He's never liked tariffs. So there's no way in hell Bessent was in the Oval Office and like, hey, Trump, we should do 50% on the E. Like this is so obviously a form of just aggressive negotiating, in my opinion, which does create volatility in stocks. But today it's going to be a question of if the market actually reacts the way they acted on Liberation Day. And I don't know if that's exactly how they're going to try to play out. All right. What else do we like? Am I like? How are you thinking of that? Because again, we went through this in April. I'm genuinely curious on how people are thinking of if this is real or not. Like my gut reaction is, and it's okay if you disagree with this, but my gut reaction is he's not serious about these. These are made up fairy tale numbers. 145% tariffs were stupid. He like we all knew they were stupid. 50% on the EU is stupid. There's no way we're going to tariff European countries at 50%. It's a bluff. I just feel like it's a bluff. And the problem is like he's bluffed so many times that I think to an extent people can call their bluffs. or call his bluffs. But maybe not. Maybe he's not bluffing. Maybe he's actually that serious and he's going to do 50%. Like, I really don't think that's going to be the case. I really don't. This whole tariff narrative is starting to bore. Dude, we haven't said the word tariffs in so long, right? Like, we really haven't. It's been a good like 3-4 weeks where we just haven't said the word tariffs. Or like, I remember every day in April, it was like tariff, 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 every other sentence. I guess, maybe Trump was bored of just like the coverage on the media. He wanted to get some tariff conversation again. But yeah, it's like boy who cried wolf, boy who cried tariffs. I mean, I'm just not taking it seriously, right? And if we actually get some really juicy dips, like, okay, so put in the chat, what is a juicy dip to you? Pick your favorite ticker and then put a price that would be a juicy dip. Like, I don't know, NVIDIA 110, given it was at almost 140, that's a juicy dip. Robinhood 50 from basically 65, that's a juicy dip. Palantir 100, even though I know Palantir will still be expensive at 100, but like down from 133. Grab going back to like 420, 430, like AMD back to 90 from 107. Like if we get those types of dips, I think we'll get some market participants to step in. But the question is the volatility of 50% random tweets on EU enough to actually get us back to those levels? And I just don't know. Jax is in video 105. Jason says Palantir 80, Shopify at 70, Rocket Lab at 50. Dude, Rocket Lab at 15 was literally the low in April, right? So if we touch those lows again, we're going to have to see. You guys saying Bessent is live? He's supposed to be live at 11:30. Let me see if he's live on another channel. Let's see. Bessent is... Oh, he's on Fox. Okay, hold on. Here it goes. All right, here's Bessent. Here we go.
President accept on the Senate revision?
Well, I think we're going to see. The House had been working on their bill for a year, and I know the Senate, led by Leader Thune, is going to take this up immediately. And I'm not expecting that there's going to have to be that much change. And I respect Senator Johnson's position that we do have to get our finances in order, and that's a combination of controlling spending but also growing the economy. We did not get into this fiscal mess overnight. This has been a long process. We're not going to fix it overnight. I'm aligned with Senator Johnson on fixing it. I think we've just got to be careful on the timing.
You mentioned economic growth here in your comment there. This bill adds trillions to our debt. How is that acceptable to this administration?
Well, again, you're referring to the CBO scoring, I believe, which is tenure scoring, and it's DC style scoring. So we think that we can both grow the economy and control the debt. And what's important, Bill, is that the economy grows faster than the debt. So what I would tell your viewers to focus on is what I'm focused on, is what Secretary Yellen was focused on, is what is the total debt to GDP? Because we can grow our way out of this. That if we change the growth trajectory of the country, of the economy, then we will stabilize our finances and grow our way out of this.
On the tariffs that you mentioned, you had a lot of discussions in Canada. Japan was a part of that. You've talked about Japan a lot. If the Japanese is not the next country to do a deal, who is?
As I mentioned before, we're far along with India, and they got in early on. Many of the Asian countries have come with very good deals. So there are 18 important trading partners, and I would say with the exception of the EU, most are negotiating in very good faith.
Who do you think goes first?
Bill, we're going to have to see.
Is it a summer battle? Do we take this into the fall? And if we take it into the fall, are we talking about 2026? To do a deal you can announce publicly?
With the EU.
With the EU, which we have with anybody, you pick it.
No, look, these deals are moving quickly. And I think as we approach the end of the 90-day period, we're going to see more and more of them announced.
Okay, is that July then?
I think that's That's the 90 days.
Okay, so we will look for that then. On Doge, you announced yesterday that Sam Korkis will stick with you as the new information officer at Treasury. The reason why this is important is because 2 months ago, you sent this on X. You said IRS modernization is 30 years behind schedule, 15 billion over budget, relying on outdated technology. We're working hard to make it more efficient. That's just stunning when you think about that from March 21st. How long before the IRS is in the year 2025 then?
Well, we got to get them into the 21st century first, because this modernization project, I believe, started before Sam was born. I believe the project started in 1990. I think it spent about $48 billion and is running on a programming language from when you and I were in college. So I think we can have this done by the end of the president's term, and along the way make substantial improvements. You know, if we were to look, the IRS makes about as many payments as a mid-sized U.S. bank. A mid-sized U.S. bank does it with 10% of the people and with 10% of the cost. So my priorities at the IRS are collections, privacy, and customer service. And I think that this modernization that we're doing in the IT stack is going to increase all three.
So the point on that then would be, even though Doge is not in the headlines, Doge is not dead.
Well, the point, Bill, is that this Doge effort is one of the most important efforts of my lifetime. And what I am committed to doing is not letting the bureaucracy slow it down too much. That Elon Musk is one of the premier, or probably the premier businessman of this generation. He launched this thing or launched this cost-cutting program. And if we go back to Senator Johnson, that we need to get the cost under control, but we need to get government efficiency under control. We need to make the government work better for the American people. And at Treasury, we are committed to doing that with the IRS.
Okay, so we'll see where that goes. I got about 30 seconds left. The penny will cease production next year. You have said the dime is still profitable.
Okay, I don't think anyone cares about the penny. So they didn't ask him about the 50% tariffs. I guess, I don't know. Maybe they were told not to talk about that because Bessent didn't have anything to say on it, because Trump just announced it, maybe without Bessent knowing about it. But they didn't ask him about the thing that actually mattered. Bessent's going to be live with Bloomberg at 11:30. I'm sure I would hope they probably ask about the 50% EU stuff back then. He'll get a couple hours to form an opinion on it. But we didn't really get much from that interview other than, hey, deals might be coming by July. And realistically, Bessent didn't even want to confirm that it were coming by July. So we got about a minute left, and we are going to see kind of how the market reacts here. Again, the 10-year is down. Bond market potentially saying they don't believe this 50% tariff on the EU. So, I mean, we're going to have to see, dude. Do we get any level of buying the dip? You got a little bit of a green candle right there on NVIDIA 30 seconds before we open. Or is this going to be, one of those things where things get way more red throughout the entire day? I don't know. This is going to be, what a Friday, dude. Who would have thought this is what we were going to wake up to on Friday? I did not expect this Friday, but today is going to be one of those days. Nuclear stocks are surging because Trump's going to sign an executive order later today about nuclear power. So Oklo's up 13%, SMR up 14% as well. So we're going to see how these stocks react as we get into the market open. All right, folks, here we go. It is Friday, May 23rd, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. All right, wake your ass up. Let's get into it. Thank you all for being here. NVIDIA down 2.45%, 129.70. NVIDIA is down. You got slight 2.3% decline right here on NVIDIA, but we are indeed down. Robinhood, 63.34. Robinhood is down, but it was at 62.40 in the pre-market. So Robinhood, what I'm going to be tracking for the next 20 minutes is, do we go back below the pre-market lows? I think that would be indicative of like, hey, we're actually going to be red for the day. If we stay above it, even if we end red, we might not be as red as what people thought. 62.40 on Robinhood, now 63.30. Tesla back above its pre-market lows. Tesla was at 333. Now it's at 335. Rocket Lab 25.15. Palantir was at 119. Now it's at 121. You actually have some green candles on Palantir. SoFi 12.87. That was at 12.70. Amazon 198. Bill Ackman bought Amazon yesterday. So he now owns 2 of the Max 7s in Googs and Amazon. The China stocks, I'm a little scared to see. ELF down 4%. Makes sense. That's heavy China. Nike is down 2.5%. Apple's probably the worst of it. Apple right here down 2.8%. But even Apple was at 194. Now it's at 195. I mean, I don't know, bro. People might just be calling BS on this. They really might. Let's see. It's only 2 minutes into the open, but getting some green candles across these names, even if they're still red. Hims right here goes green. Wow. Hims completely shrugging off this. Hims going green. Hims one of the only green stocks of the day. DoorDash is down 1.5%. Duolingo's down 1.2%. TLT, ironically, is green. And again, this is green because bond yields are down today. So even with the 50% tariff announcement, bond yields not spiking. PayPal right here down about 2.2%. Google was at 167 pre-markets. Google's 169. Not too bad. Intuit had a great earnings yesterday. Intuit right here, 8.3% green. They deserve it. Absolutely crushed quarters, 15% organic growth. So Intuit getting a lot of love right here, and it makes sense for Intuit to get a bit green. Robinhood 63.18. Deckers also had an earnings. The only reason Deckers fell, Deckers right here down 23%. Okay, maybe there's more than this. Deckers fell, in my opinion, not because of earnings or guidance, but because the chairman of the board stepped down. It was down like 12% after hours yesterday. I don't know what the hell they said on the call to be down 22%. Maybe this is because of the volatility, but a lot of their stuff comes from China, not the EU. So I don't know why the announcement today would necessarily affect them this badly, but Deckers right here down 22%. Oklo, again, Trump is signing executive orders later today about unlocking more uranium based on the Wartime Act for expanding data centers and nuclear energy. That was the rumor yesterday, kind of confirmed by the end of after hours at 8 p.m. yesterday, and now the market's reacting to it. He has not signed them yet, but he's probably going to sign them later today, and that's why Oklo right here is up 10%. Then SMR is also up 8.65%. Currently right now, Palantir wants green. There she goes. She goes green. 122.36 on Palantir. Tesla 336. Nvidia back to 130. I mean, so there's 2 things that are happening. Either this is retail saying, cool, we have another dip. We're going to buy the dip. That could be happening. Remember, on Monday, retail bought $4 billion worth of stocks in 3 hours. It was the fastest velocity of spending that retail has ever engaged in when it came to retail inflows by the market. And that was because of the Moody's dip. The Moody's dip was like a 1 to 2% dip across the entire market. This is more, advanced than Moody's, in my opinion. This is like, 50% tariffs on the EU seems like actually something that could really hurt the market, not a credit agency getting upset at the United States deficit spending. And this right here is not creating that same level of volatility that we saw after Moody's. SoFi right here, 1294, Google 169. The other thing that could be happening are the toots. The toots could be stepping in and saying, well, we've been waiting for some dip, especially because we've, missed out on most of April and May's rally. So I guess maybe Nvidia 129 is our opportunity, which again is just really good for all of us who bought in April. If 129 is perceived to be the dip, but that could be happening right here. Meta at 628, that's red, or that's red by about 1.29%. CoreWeave, this one fell yesterday after being up 30% for the week. CoreWeave up about 2.2% here right now. Yeah, some of these stocks are barely down, dude. Some of these stocks are barely down. D-Wave, all the quantum names. If the quantum names are green, dude, quantum names are barely down. The quantum names are some of the most speculative names in the market, just in terms of valuation. And they're down 2%. Are you kidding me? That's not a dip, bro. And if quantum's only down 2%, NVIDIA is not going to be down 5%. Like, that's just not how the market works. So if we're going to only give a little dip on quantum, I don't think we can expect, a disgusting dip on the broader market. Robinhood just hit 64. Where's Archer? Archer had a nasty short report about them yesterday. Archer goes green. They were down 3% yesterday. They're now up 1% currently right now. And then where's the S&P? S&P 577. It was at 573, folks. Like, it was down 1.5. Now it's down 0.94. I don't know. It just doesn't feel crazy to to think that maybe the market's just saying we don't believe in this anymore. You know, we just don't believe in this. PayPal right here, 69.82. SoFi 12.97. Google 169. You got TLT at 84.64. Nubank at 11.95. That one is below 12. And then DoorDash right here, 199. Duolingo at 5.15. Amit, does this mean that Trump is losing influence? I think that what it means is that the market is losing confidence that he's actually serious about these draconian tariff rates. Because like no, there is no world, in my opinion, over the next 4 years where we want to have any level of good relations with the UK or anyone across the entire world. We already got a trade deal with the UK, but with Europe or South Africa or any of these places and tariff the crap out of them. Like it's just not going to work that way. And I think the market's saying we're not going to exist in a world where we tariff the EU 50%. And because of that, they're not getting as upset or as dramatic as all of us to an extent were back in April when we thought he was serious with his fancy board that had all these reciprocal tariffs. So is he losing influence in order to affect the stock market? Yeah, at least when it comes to these tariffs. But also it's a question of, how much the EU believes him, because if the EU is going to call BS as well, then, he might say 50% turns to 75% because that's what he did with China. Originally they were 50, then they became 100, then they became 130, then they became 145. And so if the EU doesn't take it seriously, he might continue to increase the rates. And then maybe the market reacts if it's instead of 50%, it's like 75%. But as of now, the market is not buying this. Palantir right here, 122.44. Palantir goes green on the day currently right now. Reddit goes green. Yeah, dude, Reddit should not be green. Reddit is a high-flying beta stock that thrives on speculation. That like this going green is not the market being afraid of stocks right now. Even Bitcoin, bro. This thing was at 108. It's up $1,500. It's at 109.3. I mean, if anything, covered calls are safe on the day, right? I continue to say this is a covered call market where it's not a rocket ship like 2024. So you can get away with benefiting off the volatility on these stocks. If you had Hood 70s this week or NVIDIA 137s or Palantir, Palantir 140s, those are completely worthless now because Palantir did not get to 140. And when it was 133, I had a little bit of a feeling that Palantir would be really tough for them to get over 140. And now it's at 122. Like this is the way to kind of, make some additional income and benefit off this volatility. But also it's not to the point where covered calls are printing because your portfolio is down that dramatically. It's more so just like stocks are flat, if not down a couple percentage points, which is enough to get the calls to print as well. Webull had a decent earnings yesterday. This stock was down 7%. Now it is still down 7%, 12.58. It's basically giving back the gains it had yesterday. It was up 7% during the day. Now it's down 6.8% right here. The one thing that surprised me about Webull is that their growth on equities and options and net funded accounts is not impressive at all. It's like 10%, 15%. Like that's just not like serious growth in my opinion. So although the valuation is only $6 billion, they're doing $100 million in revenue. That's growing 32%, but the actual user base of the platform is not growing to the point where I'm like, oh, they're like a serious brokerage that's like worth investing in. They're a good product, good platform. I use them. But as an investment, are they going to have explosive growth? At least yesterday's numbers did not show me that. Where are the semis? SMCI down 3.68%. AMD down 1.7%. Dell down 0.85%. And then Micron is down about 2.58%. All the semis down about 2 to 3%. NVIDIA next week on Wednesday, that's going to be a big one. That's going to be a very big one. And that will kind of determine how the rest of the semis do as well. All right, let's see what else do we have? Yeah, so Rob, thanks for the super chat. Based on Webull's ER, would you say it's a good time for us to start a position? So I haven't really gone through the financials of Webull, but it like qualitatively, if you're trying to make an investment in Webull, the growth wasn't impressive. I don't know if the growth is impressive enough for the current valuation, but just like objectively, 10% user growth is like not 15% equities growth. Like that's nothing, dude. Like it's just not, at least not in a brokerage world where you would like Fidelity is growing 10%, Fidelity is way more established. Like Webull should be growing 30, 40% across the board. But, they might not just have that good of a product that everyone wants to be able to use. So investment perspective, it wasn't that exciting. Deckers. Okay. So again, I still don't get why Deckers is down this much. I don't get it. Their earnings were not bad. their guidance maybe was a little light. I know the chairman stepped down, but I think that was for personal reasons. That wasn't because of anything suspicious. This one is confusing. This one is I don't understand it. And I can't buy the dip on it because I really haven't gone through it. But Decker's down 21% is weird. That's insurance company growth. Yeah, dude. It's like, you can't be growing like an insurance company and then, want to get a big multiple from the market. Fear and greed. Okay, so fear and greed, I expect it to be relatively flat or slightly down. Yeah, it's flat. I mean, it's 66. It was 69 a couple of days ago. So coming down a little bit, but this is not some, neutral or fear category that we're in yet. The VIX is up a little bit. Well, a little bit more than a little bit. It's up 24% today, but stocks are not down even 5%. So even with the VIX up as much as it is, yes, we are, feeling more volatility. Nvidia at 130 down 1.7% is just not volatile. Like that's a regular day for Nvidia. So I don't know, dude. This 50% thing, I really wonder how much the market is actually going to believe that this becomes real. What's your take on SMCI? I don't like their margins, so I'd rather just buy Nvidia. I know a lot of people like SMCI, but if anyone has actually looked at their gross margins, they're not good. They're like 11%. So people look at their growth, and their growth is great, but they don't make any money off that growth, or they make a very small amount of money. I just rather buy Nvidia. Like if you're so super bullish on data centers and AI and CapEx, like Nvidia to me seems like the obvious answer that has an actual moat. Also, SMCI has competition. I don't think they have a moat. HP and Dell I think Dell took over XAI's server farm over SMCI. And so I don't hate them. I just feel like Nvidia is a better option. They're probably cheaper than Nvidia though. That is true because their stock got clobbered over the past month. Spotify, that one is green, 639. Netflix, Spotify, Netflix kind of seen as those recession resistant stocks. Netflix basically flat on the day. Those not getting affected by this. Google's trying to go back to 170. Palantir, 121.95. I mean, whoever's buying the dip is buying it. Apple, 196. It was at 194. Bitcoin at 109. GameStop's actually up 1%. It was up 10% yesterday. Uber's at 87. Walmart, 95. Again, CoreWeave green. This is just not what I think people expected in the pre-markets if you thought it was going to be a really ugly day. At least not yet. At least not yet. Yeah, Robinhood's about 1% from going green. Starting to wonder if AK Media CEO thinks Trump is a genius or he's just a permable. But first of all, I don't think I'm a permable. I think I'm pretty objective when like things are bad. Like in April, I was objective that things are bad. Although I bought the dip, I still was like, hey, this is not the right execution of these tariffs. I also don't think Trump is a genius per se, and that him just blurting out these tariff rates can easily resolve all of his issues because we still don't have any Chinese concessions yet. So for everyone who is like, oh, that 145% tariff on China was such good negotiating, we didn't get any actual update. We just got a 90-day pause with the Chinese tariffs. We didn't get China to say, hey, we're going to buy $500 billion worth of your products anymore, right? Like they didn't actually concede to anything. So we have to wait until the end of July when the negotiations hopefully get more advanced, where we see if the pressure Trump put on China actually resulted in China opening up their country to us. And so I'm not saying that was a genius tactic. I don't know if this EU stuff is going to be genius, but I do think it's BS because we already have seen the story play out. So genius or not, I don't know, but we've seen the story with his capital letters in his Truth Social posts to show he's so aggressive about these tariff rates. We've seen it happen. And then we see him walk it back pretty quickly, which is what I think is happening. Like the bears this morning that woke up and that were so happy that finally they got some momentum to their bear case. I mean, like, like how do you feel like this is a win? And I know we have a long day. Maybe stocks go horribly red by the end of the day. 15 minutes in, we're not really seeing any crazy volatility. But if your win as a bear consists of Trump tweeting something that we all know is not going to happen, that can't be your bear case, bro. So that's not me being a permable. That's just me saying you got to get a better bear case. It's like, talk to me about the Fed, talk to me about inflation, talk to me about rates, but don't talk to me about 50% EU tariffs that we know are not going to happen as your bear case. Because it's just like, I just don't believe it as a real bear case here. Dan Ives upgraded Tesla to 500. Okay, yeah, so Dan Ives did upgrade Tesla back to 500. He went down to 350 in April, upgraded them today to 500. We listened to him yesterday. Again, his main argument was just the the idea of FSD. This is what he said. We believe FSD penetration could increase to 50% and change the financial model margins for Tesla looking ahead. Taking a step back over the last decade, we have never viewed Tesla simply as a car company. Instead, we have always viewed Musk and Tesla as a leading disruptive tech global player. And the first part of this grand strategic vision has taken shape over the past 5 years. Now it's on to its next chapter, autonomous. We believe Tesla remains the most undervalued AI play in the market today. Rome was not built in a day, and neither will Tesla's autonomous and robotic strategic vision. There will be many setbacks, but given its unmatched scale and scope globally, we believe Tesla has the opportunity to own the autonomous market and down the road, license its technology to other auto players in both the US and around the globe. So Dan's excited about Tesla. Now, he also said some stuff about Apple right here. So on Apple, remember, Trump said, hey, he wants 25% tariffs on Apple if they don't make it in the United States. He said a few minutes ago, President Trump posted on Truth Social in an eye-opening post that he will put a tariff on Apple of at least 25% after the company made strategic moves to ramp its iPhone production to India away from China. This comes after the announcement from earlier this week that Foxconn announced it will be building a $1.5 billion factory in India. While Apple has announced $500 billion of investment into the U.S., which are primarily AI-driven initiatives, we see no chance that iPhone production starts to happen in the U.S. in the near term, given the upside-down cost model of Herculean-like supply chain logistics needed for an initiative. The pressure from the Trump administration on Apple to build iPhone production in the U.S., as we have discussed, this would result in an iPhone price point that is a non-starter for Cupertino and translate into iPhone prices of $3,500 if it was made in the U.S., which is not realistic, as this would take 5 to 10 years to shift production into the U.S. I mean, yeah, that's fair. Like, Apple's not making iPhones in the US. That's not happening. I think the way to resolve this Apple thing, NVIDIA, by the way, back to below 130, 129.90, Tim Cook needs to promise Trump they're going to start making something in the US. And I think what that could look like is maybe their MacBooks, maybe their watches, maybe something that's less revenue accretive than the iPhone, and not all of them, maybe just a portion of them. They set up a factory in Texas. They're already making the Mac Pros in Texas. If he can say, hey, look, we're not going to build our iPhones, but we're going to build like XYZ product, maybe that's enough of a ego boost for Trump to say, see, I got Apple to produce inside the United States, and that can kind of calm things down, which is almost exactly what he did back in 2017. He started shifting a little bit of manufacturing back to Texas, and that got Trump to kind of lay off. Workday, by the way, down 12.7%. They had some not amazing Q2 guidance, and I think that's why the street is upset about this one, down about 12% on the day. I think that's how Tim Cook could resolve it, but he's going to have to play politics here to get a chance to do it. Yeah, they should make the Vision Pro in America, bro. Dude, he should convince Trump that the Vision Pro is like the best product in the world. And I don't know if Trump's up to date with, how the Vision Pro has performed. And he should be like, you know what, Trump, we are going to make the next generation of VR and AR in the United States. And, maybe that could be the win that Trump needs. By the way, speaking of Apple, Bloomberg reported yesterday they are planning to launch smart glasses by the end of 2026 and expects to produce prototypes in large quantities by the end of 2025. So not Vision Pros, but what Bloomberg is referring to as smart glasses, which to me is like kind of like the Meta Ray-Ban stuff. I think this is good news because Apple needs to do something because they have no growth outside of their buybacks. And if they don't get their next S-curve, I don't know what keeps the stock at $3 trillion. But I'm also skeptical that Apple is going to create a smart glasses product that's actually something people want to wear. I mean, Johnny Ive, their best designer, he left 5 years ago and now he's with OpenAI. And I'm also skeptical of any like AI product that doesn't have a touchscreen or whatever. Like I kind of don't believe in that form factor. But if anyone could make a product that actually gets people to like love the process of not using their phone and engaging with AI, it would be Johnny Ive, because he designed the iPhone, designed the MacBook. Like, this guy understands design and user experience in a pretty sophisticated way. By the way, remember we were talking about Meta Planet yesterday? This is why, I'm sorry, I just have to say this. This is why you don't chase. This is why you don't chase. Okay. This stock is down 40% today. It was down 40% yesterday after going up 200% on Wednesday. Why did it go up 200% yesterday on Wednesday? I don't know how everyone decided to say, hey, something that trades at 10x its net asset value of Bitcoin, this is essentially a Bitcoin treasury company in Japan, deserves a bid, because instead of buying $1 of Bitcoin, we should spend $10 to buy $1 of Bitcoin. That was the logic over the past week on social media with people hyping up the stock. And now it's up 20% for the week, which is nice, but it was up 200%. And if you bought it at all yesterday or the day before yesterday because you were chasing it, you are down 80%. 40% yesterday, 40% today. First of all, this is very healthy. I'm not happy for people that lost their money, but I am happy to see that like this stuff isn't being rewarded, because you cannot have a company trading at 10x their net asset value for no reason. Like, it doesn't make any sense. Like a MicroStrategy at 2x, you know, you can say what you want about that, but at least that's somewhat more reasonable than 10x, even if you think the 2x is not there. And MicroStrategy also, they keep buying more Bitcoin. MetaPlanet doesn't even have a 1/100th of the type of Bitcoin that MSTR has on their balance sheet. So at least you can kind of say, hey, there's some billions of dollars, hundreds of billions of dollars here. Maybe we give it a little bit of a premium. MicroStrategy down 3.5% of the day. But whoever was pumping the crap out of this and like everyone talking about it, the amount of DMs I got on this, the amount of posts I was tagged in on MetaPlanet, and then I looked at the numbers and I'm like, wait, they trade at 10x their net asset value. Why are you buying this? And it trades OTC. You can't even buy it on a regular exchange. You have to go through some fancy stuff just to buy it. Like, come on, bro. That's a level of speculation that we just don't need in this market. And as a result, some of this shit gets hit. Some of this shit gets hit. So I don't know, bro. You got to be really careful with this stuff. I miss a lot of things that run up on, like, you know, I missed Webull going to 80. I missed Newsmax at 300, but it's because they inevitably come back down. Like, what goes up comes down unless there's a real company attached to it. So people get upset about Palantir's valuation. It's so aggressive. And I agree, the valuation is aggressive, but they are growing. There is some substance to Palantir. There was no substance to MetaPlanet other than they trade at a ridiculous premium to their Bitcoin and people are pumping it. There's no substance to Newsmax, right? Like, so you got to kind of recognize what is real, what is not. And then, you know, if you miss the 200% run, you miss it. But at least you also miss the 80% downside pressure on it. Chicken Genius was pumping it. See, like, I don't, it's usually when people pump this stuff, it's because they're heavily allocated into it. Like, anyone telling you to go buy some penny stock in Japan, that, like, it's, I don't know, bro. It's like, it's just weird, bro. I can guarantee you that will never happen from me. I even hesitate when you guys mention all these penny stocks in the chat and I have to bring it up because I'm like, dude, like, I don't want to be associated with this type of shit. Because usually it doesn't work out the right way. DoorDash right here, 200. That's down. Is Palantir green? Palantir slightly red on the day. Rocket Lab 25. So Rocket Lab still holding 25 like a champ. NVIDIA 130. And then Robinhood just below 64. A lot of these names holding on right now. Nate says pump HIMS instead. I did say I would buy HIMS below 50. You guys got close today, but you couldn't get me to do it. Still at 53, dude. I need to see that 4 psychologically to pump this. I need to see it. We missed out on the run, but we also missed out on not losing our money. Exactly, dude. It is very rare to buy something and it just goes up 200% in a day. Like, can we all acknowledge that? It's rare. It is very rare. That doesn't just happen, bro. Like even the best of the best day traders, they look for a 0.35% move, a 0.2% move, and they get their money and run. They buy at $1 or they buy it, you know, NVIDIA 129.84. They're hoping it goes to 129.97. They take those 10 cents in between and they leave. So the idea that you're investing to expect a 200% move again and again and again within a short period of time is insanity. Like, it's absolutely ridiculous. And I was like that years ago, and I got humbled. Everyone gets humbled when you're introduced to this stuff. But whoever bought MetaPlanet got humbled. That's it. It's just way too aggressive. Oklo right here. Is Oklo green? Oklo is green. 47.30, up 19%. So shout out to Chris Camillo, who is a friend of mine, but also he literally posted this. Look at this. He posted this thing. He posted this at 3:24 p.m. The headline was, Elon Musk says AI could run into power capacity issues by middle of next year. Chris Camillo tweets, Oklo, disclaimer, long, not financial advice. And then I posted this at 5:44 p.m. because that's when the headline came out that Trump is getting ready to sign executive orders around energy. See, this is the type of social arbitrage I respect. Looking at headlines and saying, hey, where can I get the alpha against the headlines on companies that will play a role? Not let's pump some penny stock on social media because they have some Bitcoin on their balance sheet and then use it as a justification to hopefully see some gains on the stock. Like, there's just a different way of playing this out. Google right here, 168, Amazon at 200, Meta at 626, and then Robinhood 63.84. currently right now. CEP is held up with the next MicroStrategy narrative. His options chains are already volatile. Jack Mallers probably has something cooking. So CEP, again, this one is another of those Bitcoin treasury companies. Yeah, I don't know. I'm not touching this either. You know, I think Jack Mallers is one of the smartest guys out there when it comes to Bitcoin. And I'm assuming he's going to do something a little bit different than just buy it and, you know, put it on the balance sheet. But this one's already run a lot. This was at $10. Now it's at 47, right? It's trading at a more aggressive premium than MicroStrategy when it comes to just the pure assets on their balance sheet versus the premium. So this is another one where if you really believe in the mission of a Meta Planet or a CEP, then sure. But if you're buying it purely for the pump, which I would say 99% of people bought it because they saw it on social media and they wanted to get in on the action, it's just you can get humbled, bro. You can really get humbled with that. Chugging Celsius this morning, still not buying the stock though. Where is Celsius? This was green all of April. Celsius now is slightly red, 35.25. Celsius has held up though. Celsius stock year to date, it's still outperforming a lot of the Max 7. Yeah, it's up 30%, dude. If you bought Celsius, especially before the Alani acquisition, you're not that upset because this one has worked out pretty well, up about 30%. Uranium ETF just hit 10%. That makes sense. URNM. Does anyone own anything exposed to nuclear, like uranium ETFs or SMR or Oklo? Because if you did, I mean, Oklo up 20%. That's not a bad day for you. Is this sustainable on Oklo? I don't know. The news is priced in on the Trump executive order. So the question now becomes, do you sell the news? And given how volatile Oklo is, I don't think it's crazy to sell the news and take some profits, but the news is definitely baked in. I don't think him signing the order is actually going to make the stock go up higher because, the stock's running based on it right now. I see a lot of Oklos. I see a lot of NNEs. I see a lot of CEGs, Constellation Energy. Wow. Nano Nuclear up 20% as well. It does make sense. We're going to need more energy and we're going to need it from somewhere. And nuclear might be the way we get there. Okay. Do we have a headline on India? Hold on. Let me see. I think we have a headline on India. Do we? Oh crap. We do. Hold on. Well, this is from India CNBC. So India has their own CNBC. Let me pull this up right here. This just came out. Okay. Here we go. India and USA close to agreement on the first tranche of the trade deal. So this is what India's version of CNBC is reporting. Both nations may have an in-principle agreement within the next 7 to 12 days. The USA likely to partially exempt Indian goods from 26% reciprocal tariffs. USA likely to impose 10% tariffs on Indian imports while providing zero duty treatment on some product lines. And then finally, Trump's plan of imposing 25% tariff on Apple phones unlikely to have material impact on Apple manufacturing in India. Okay, so India CNBC kind of saying in the next 7 to 10 days, we should get an update on the first tranche of the negotiations when it comes to a trade deal. S&P down 1.1%. So S&P still down 1%, not really moving the S&P on that news. Trump's not going to like them stomping on his Apple tweet. I mean, look, a 25% tariff on Apple, I do think would have somewhat of an impact on, let's say, Apple's bottom line. Maybe it's not going to affect Apple's manufacturing in India, and it's not going to stop Foxconn from building the $1.5 billion factory. But I do think it would have, an impact if they have to pay 25% on every iPhone to tariffs. And I don't think that's going to take place, dude. I think Timmy Cook is going to go to Trump, go to the Oval Office. He's first going to apologize for not showing up to Saudi Arabia. And then he's going to say, yeah, can you please get rid of these 25% India tariffs? Also, like, Trump knows, dude, he can't put a 25%. Like, Apple is 7.3% of the S&P 500. Trump knows he can't just ruin Apple. Like, that's just not how it works. So I think all of this is BS. All of this is posturing, and we're going to get some reconciliation to it eventually, even if it takes some time. But I just don't really believe it. Just don't really believe it. I mean, what do you think about CEG? I've never went through their financials, but they partnered with Microsoft a couple months ago. This is legit. Constellation Energy is legit. They're not a joke when it comes to being able to be one of the core energy providers across a variety of different fields, nuclear obviously being one of the main ones. So I don't own them, but I definitely don't think this is a bad way to play the energy trade. UNH is down a little bit, 295. That one's held up though. I know it's down from 320, but at least it's back up from 248. So that one not horrible. And it's been, you know, maintaining at least some of its momentum. And then Oklo up almost $50, bro. 22% on the day, 48.80 currently right now on Oklo. Nukes is a good ETF. Yeah, NUKZ. I heard of this one. This bad boy up 4.43%. So nuclear really catching a bid, and then Palantir right here at 122 currently right now. Amit, do you think Tesla or Nvidia returns more this year? I think Nvidia is still going to put up a lot of growth, and I think Tesla is not really going to put up much growth. So if it returns more than Nvidia, it's because everyone's excited about robotaxi. We are yet to see if robotaxi is, you know, going to have a good rollout. I think Tesla could outperform Nvidia if Elon drops a really big Optimus update, but you know, that's like just pie in the sky. We have no idea when that's going to happen or if that's going to happen. So I'm going to go with Nvidia simply because I think they're going to still have really good growth. The Saudi UAE stuff is a great catalyst for them. Even if they lose some of the China revenue, that should be okay. Elon's going to be paying Nvidia about $20 billion for 1 million GPUs pretty soon. So I still think Nvidia has a good runway of growth this year. Doug says, I've stopped following SoFi and sold all my shares. I still have some spreads, only to find out my little brother just opened a large position in shares. Okay, so Doug, if your little brother just opened a large position in shares, it's probably because he heard you talk about SoFi. So I feel like you got to take some accountability there. Or if it wasn't you, I'm curious, how did he find out about SoFi? SoFi right here, $12.99. This stock, again, it's been stuck. I think rate cuts unlock it. Or I think a narrative change unlocks it. The narrative change is not really happening. The narrative change has, you know, it's just been taking some time to get there. But I think rate cuts are what SoFi needs. And unfortunately, right now, it's just not happening right now. Or it's not there. What are people doing on SoFi? Is anyone buying it or selling it still? Put in the chat if you're buying or selling SoFi. Put in the chat. There was this guy who went viral yesterday on Twitter for selling SoFi. I'll see if I can find the post. But he bought at 18 in January, and he got, and you know, yesterday he just couldn't handle it anymore, and he sold all of his SoFi. This is one of those things, bro, where this is like Palantir at $7-8, right? We just have to deal with the pain of it, and then eventually hope that it would play out. I think SoFi's but SoFi's also still up for SoFi's credit, 90%. It was at $7, right? It's at 13. So it's not like it hasn't performed from those lows. It's just kind of been stuck in this range basically for the past 5 months. Mark says, I have it all locked up in covered calls. Brandon says, I sold it to buy more hood. Sammy says, I'm holding 2,000 shares. I wish I could sell some covered calls, but they are held in SoFi and you can't. Damn, that sucks. I think that comment kind of exemplifies the problem with the invest product. He has 2,000 shares, but he can't sell covered calls because they're on SoFi, and SoFi doesn't let you sell covered calls. Jumbo says, I'm buying SoFi. Tria says, sold some, keeping most of my SoFi. Doc says, I sold at $13.95. I went to HIMS. I think it's a mix. I think it's like 50-50, people buying versus people selling. I still think $20 by the end of the year. I know I've been bearish on SoFi, but I still think if we get enough rate cuts, $20 by the end of the year is not going to be something that would be surprising to me. Now, maybe I'm saying that because my options have a $20 strike and I kind of need $20 by the end of the year. So maybe there's a little bit of, hopium there, but I do think it's definitely worth more than 13, probably closer to that 18 range. And then, I think it could get to 20. But again, this is a narrative issue with SoFi, and I don't know what changes that, at least not right now. Do we have some macro data? Let me see. Do we have housing data? What do we have? We have new home sales for the month of April. Okay, here we go. New home sales. The market wanted 690,000. We came in at 743,000. 743,000. There you go. Let's get an update on these new home sales right here.
Yes, new home sales for the month of April. And boy, this number is surprisingly strong. 743,000 seasonally adjusted annualized units of single homes. And that's up almost 11% from a downwardly revised 724 in the rearview mirror. That becomes 670,000. This is the highest pace on new home sales going all the way back, get this, February of 22, and we weren't expecting it. If you looked at existing home sales for April, it was down 0.5%. Its pace at 4 million seasonally adjusted annualized units was the slowest April pace, and April's important, kind of the beginning of that spring season, going all the way back to 09. And the median price for April in existing home sales, 414,000, was the highest for any median price in April ever. So this really is surprising. And for more detail on why this might have kicked up, let's go to Diana Olick. Diana?
Well, Rick, I'll echo your surprise on this one, because when you look at how these numbers are counted, new home sales are based on signed contracts. So people out shopping during April, that's when the average rate on the 30-year fix went from 6.71% to well over 7% before dropping back a little bit during the end of the month. But what's interesting here, though, and you set a price, so I have a median price of $407,200, down 2.2% year over year. That's what the builders have been talking about. We heard from Toll Brothers this week that they were lowering prices a bit. And then there are the mortgage rate buy downs, which the builders are able to do and which the existing home sellers are not really able to do. So you're also seeing supply is actually up dramatically, up 8.6% year over year. So you're looking at the builders with a lot of supply on their hands. They do have the levers to pull to lower prices and to buy down those mortgage rates. But again, when you saw all the volatility in April, whether it was the stock market after that big tariff announcement, it's really surprising because the builders have told us that they did see a softening in April. So the question is, do we get a real pullback on this in May? We did see that pullback, the revision down in March to much lower than expected. So this is an interesting one. We'll have to watch it going forward. But if you look at the existing market, which has a lot more supply on it and is not moving at all, this number is a real outlier. I just end with that. David?
Christopher Patel, your thoughts on this home data?
Yeah, I think she nailed it pretty much with the rate buy downs. So, people are going to buy homes because they need them, right? And when you go to buy a home, you're trying to figure out, like, okay, what can I afford? And a lot of times what happens is existing homes usually are cheaper than something that's brand new build. Throughout 2021 and 2022 and even part of 2023, you had little to no inventory on the market on the existing home side, and builders were just getting so much in premium. So they were just building up houses like right and left. And they've got a lot of inventory on their hands. And the thing is, they are anticipating probably some market weakness going forward. So their idea is, let's clear as much inventory as we can. And one of the ways that they're doing that is by doing rate buy downs, where essentially, like introductory, a lot of people are looking to buy a home. They can get you a quote unquote a lower rate up front. And you're like, oh yeah, I can make this payment. I can afford this. Existing home sellers can't really do that because they don't control like the interest rates like that. So I know that sometimes like existing home sellers can do something called seller financing, but it's not the most ideal thing. So in terms of existing sales versus new sales, there's just a lot of differences in what people can afford. And new homes are quote unquote on a monthly basis cheaper than buying something that's existing that might need additional work. But overall, this to me, when I see something like this puts downward pressure on home prices. And the thing is, now you're going to see a lot of existing homes that are coming on the market. They're competing with brand new builds. Like which one would you rather go with? Would you rather go with like a 30, 40, 50-year-old home that you have to throw another 100, 200,000 and just getting it, up to more modern, needs? Or would you rather buy this new home that's literally just been constructed? The thing that I would just let everyone know is be careful when you're buying a new home, especially vintages in 2021, 2022, and 2023. I've spoken to a lot of builders and they told me, like, look, man, I'll be honest, like they have been cutting a lot of corners. Okay. They really have been putting, like, you think that you're getting a brand new home, it's going to be great. But a lot of home builders, they're just like, they were trying to pump out as much volume as they possibly could. And so a lot of the quality in terms of home building has been a lot more questionable than usually in the past. In the past, when things were more even, like building standards and everything else were much higher, and the quality of products that they used was also very high. So I think a lot of people, they'll say, oh, it's new home versus old home. I personally would rather buy an older home that needs a little bit of work rather than buying a new home that is going to have issues that are going to show up a year or two. And like by that time, a lot of these builders, the warranty will be, they'll be off the hook, you
Right.
know? So yeah, just like I said to people, I'd say be careful. I'd rather, like I said, the quality of building materials has gone down significantly, and people need to just be cognizant of that.
Kris, what is your take on Trump threatening 50% tariffs on the EU?
It's a little complicated. Because all right, you have to dissect down what we actually import from the EU versus what we export them. And the total trade balance, like deficit, is like $250 billion. But once again, like if you look at all the services that we provide to these guys and get high margin revenue back, we're actually doing really well. So the whole purpose of this is to try to get a trade deal out of the EU, but I think some of it's necessary, some of it's unnecessary. Unlike the whole China debacle, I think there are certain things that the EU has done over the course of the last 10 years that I agree with the Trump administration on doing. Like, as an example, they've been like super litigious when it comes to our tech companies like operating over there. They've been basically like hitting them with these fines that are just like ridiculous for no reason. And it's like $1 billion for X, or $1 billion for this, and it's like, what's the like violation?
Right.
And so they've been using our tech companies almost like a punching bag, and they basically get the benefits of like a tax base from that. So the Trump administration going after that is, in my opinion, actually a good thing. The problem though is that the EU right now, if they become closer with China long term, that's not good for us. We want to make sure that the EU is more reliant on us than they are on China. And there's countries within the EU and leaders within the EU, they would rather see a complete decoupling of the United States from Europe because it benefits their national interests. Like the best example that I could give is the French. Okay. The French have a lot of things going for them, but one of the things that they have is military. Like, so they have a ton of military sales. By getting the decoupling of Europe away from the US, that means that now all that domestic manufacturing goes to them.
Right.
So it boosts them up. Same thing with the Germans. The Germans are like, hey, listen, let's go on this, like spending spree and do more and more and X, Y, and Z, but it boosts their economy and boosts their GDP. The mistake that I think the US is making, if you're trying to look long-term strategically, is you don't want the EU to become a future competitor. Like, they're fine with taking months of vacation and subsidizing all of their healthcare and basically living this laissez, like basically this just chill out life. Don't give them the reason not to be like that, because what it's going to happen is they're going to be like, oh, we need to take our economy seriously. We can't just be like, just chilling. And now you got a problem because the Europeans buy so much of our treasuries, our stocks, and our bonds. Their entire philosophy is, let's invest in America. So they basically, anytime they make any money in the US, they take that money and plow it right back into the US again, and it makes things cheaper for us, and they become more dependent on our capital market. So right now, tell me one mega cap company that was ever created in the EU right now.
The only ones I think of are SAP and Spotify. But
right.
They're not,
Yeah. So that's the thing. Like, there's a lot of talent in Europe, a lot of smart people, but they also have a very like, I don't even know how to describe it. They just have a very like chilled.
But okay, so hold on. So you're saying that the US needs to make sure that we have a good relationship with the EU, because if we become competitors, that could obviously lead to more heightened forms of competition in the technology space. And okay, so I think that makes sense here. In terms of the stock market, do you think stocks should react at all to 50% tariffs, or the threat of 50% tariffs?
I mean, look, the Trump administration has proven that they will implement tariffs, okay? And they don't give a crap about the economy and all that stuff when they're actually like implemented. So like if you look at the Chinese thing, bro, ships were turning back. This was not an empty threat by the Trump administration. So people thought, oh, Trump is going to make a deal. You know, he's not going to let the economy, he's not going to let this trade thing. No, he laid it down. He's like, nah, this is the tariff. I don't care about the economy. It's not my problem. You'll figure it out. And so the Europeans are kind of like this guy's not bluffing, and he's not the type that's bluffing. So the problem is these tariffs hurt them, but it hurts us too.
Yeah. Yeah.
And the thing is, like, how do you negotiate with someone willing to take pain? It's and put his own people in jeopardy. So the bigger challenge that you're seeing is now we could theoretically see a higher probability of recession going forward. I think that's why the bond market's reacting somewhat positively in terms of people buying some treasuries to offset, some of the volatility from equity side. So right now, if you look at the 10-year and the 30-year, they are going down a little bit. Normally, you would see like tariffs and be like, oh, inflation, and people would be opposed to buying treasuries because they're expecting inflation. This time around, I think the market's kind of saying, look, now the Trump administration, everything they're doing is like literally like putting us towards the recessionary path.
So your argument is the market's pricing a little bit more chance of recession, which is why you would buy bonds, right?
Yeah.
Based on this headline. Okay, so do you personally think he's actually going to do 50% on the EU by June 1st?
I don't know, dude. No one knows what's in this guy's brain. I don't even know if Bessent knew what the hell
I don't think he knew he was going to tweet this.
Like someone's got to get that phone away from Trump, bro. Like, at least discuss this with people. But it is what it is. And
well, your tone of voice is not as panicky as it was in April, because I think you're kind of calling BS on it to an extent.
Well, the thing is, like, our trade relations with the Europeans is good and it's big, but it's like the trade deficit is not like, oh my God, like it's such a large amount that we can't do, it's going to impact the consumer. Like, okay, look at the imports that are coming in from Europe, right? They're not your everyday things. It's like medicine, which, by the way, the US is like, we're going to cut back on pharmaceuticals, right? So that's one. Another major thing that comes into the US from there is like machinery. These things aren't going to impact the consumer generally right away. It's going to be things that are over time are going to, come, of course, but it's not going to be like right away. The other thing is like Volvo cars, like, oh, we're going to raise prices on Volvo cars. Like, we don't fucking have alternatives to Volvo cars, please, guys. Like, it's like, okay, go ahead, raise your prices 200%. Don't do any sales in the US. Like, Volvo is not like a marginal, like, oh my God, we need them, otherwise we're gonna go out of business. Nah, fine. So it sucks for the European car manufacturers that don't have a presence in the US. Like, if you look at BMW is going to do well because BMW has an entire plant in South Carolina.
Right. Which has some Figure robots working at it. Okay, so I think that makes sense. Going back to the take around, we want the EU to depend on the US, because I think it's important to kind of underscore this. So let me give a counter perspective. Would it be positive if we tariff the crap out of the EU, and then the EU, in your words, kind of gets more motivated to build their own tech and their own innovation and not rely on the US? And then we have a more, I guess, free market capitalist society where a lot of people are competing to build the best tech companies. Like, wouldn't that be a net positive thing on the planet?
Planet, yes. US, no. Like, if you want to remain a hegemon, right? Basically, and enjoy the benefits of being a hegemon, the last thing you want is for other countries to be competing against you, right? Think about it for 2 seconds. Like, why are you going to go to if you view this as a competition thing, right? Why would you want your other guys to say, hey, man, you're too weak, you need to get up? Yes, would it raise the quality of people and, like, economies around the world? Probably. But that
Yeah.
also means that now you may not be the guy on top anymore.
Right.
You know,
Right.
like right now the Europeans are chilling. Like there's something I think Josh Brown said. The Europeans investing in Europe is like investing in a museum. Investing in Japan is like investing in an old age home, and investing in China is like investing in a prison, right? So we're on the path of telling the Chinese stop becoming a prison, stop tell the Japanese stop being an old age home, and the Europeans to stop being a museum. So now people are like, oh, wait a second, maybe we need to look outside the US because the next growth vertical could be countries in the EU that want to, grow their economies and actually change some of their
Well, we saw that in April. We had net positive inflows for the first time in a decade into Europe over the US.
yeah.
Right? We saw America kind of losing some of its brand, and people are like, let's go to Rheinmetall. Let's go to something else.
Yeah, like money that was in Lockheed Martin got sold off and went to Rheinmetall. Why? Because people are like, oh, let's buy more European weapons because they're reliable. It's like, really? You know what I'm saying? Like, we put ourselves in this bad place. And so, yeah, I think the Trump administration in the short to medium term, I think from a political standpoint, a lot of people, especially on the MAGA side, will be super happy because it's like, oh, he's fighting for us. He's doing a great job. Like, we're going to get all these jobs. But if you think long term, he's basically kind of making competitors, like making the other side grow from a competition standpoint. And now your quality of life is going to diminish in the future because you've got more competition. And
and I don't think, and Kris, correct me if I'm wrong, but I don't think Kris is saying Europeans are lazy. I think he's saying the culture in Europe, which I've talked to Arnie about this extensively, is one that is not really oriented towards risk taking. I mean, Arnie told me in Italy when he was in his 20s, he was shamed for trying to start businesses. Whereas in the US, if you're 20 years old and you have an idea, the whole world says, go for it, go try.
100%. That's exactly what I mean. Like being a young person in Europe, like first of all, they have such high levels of taxation on any of their growth. So a lot of entrepreneurs in Europe are like, what am I doing here? Like, why am I trying to develop a business here when every time I try to get even slightly ahead, they come up with these draconian rules to kind of put me back down. So I think a lot of the European way of doing things is antithetical to growth. And the US is like grow. You don't want Europe to change their mind and change their ways and go to like, hey, you know what? Maybe the US is right. We become too dependent on them. Maybe we need to start growing also. It's like, you don't do that to them. Don't give them that
it's good for Europe, bad for the US, basically.
Exactly. So
okay, your the Apple take, the 25% Apple tariff. Do you think that's BS or that could actually
That's BS. Apple's gross margins are so high that if anything, Tim Cook is just like, this guy, I'm gonna have to survive him for 2 more years. Because technically, if the iPhone goes up by like $150, $200, it's not going to kill Apple. They're like, whatever, we'll just pass on the cost. The consumer will hate it, and they'll blame the Trump administration, and the midterms will be a bloodbath, and basically they'll take away his vote, tariff powers. So I think Tim Cook will, and dude, that was so freaking smart what you said. Just give Trump something to basically give to his supporters as red meat, and basically Trump will back off, right? This is literally just, oh yeah, we're gonna make the next generation of AR VR in America, and boom, Trump will be like, oh my god, Tim Apple is my friend again,
Dude, I went to the Apple store, I think 2 weeks ago, and I asked the lady, I was like, do people I was like, where's the Vision Pro? She's like, oh, over there. I was like, do people actually buy it? And she just smiled at me. She's like, no, not really. And so like Tim Cook just needs to say, we are building the Vision Pro in Texas.
Yeah, I mean, you don't have to. That's the one thing I think a lot. The Middle East, they definitely understood this. Promise Trump everything, but you ain't got to deliver because he's not going to be around to ever really get in any of this stuff. Yeah. Like, bro, like imagine right now, you're like, oh, I'm going to invest $2 trillion in America. That's going to win you a shit ton of favor with the Trump administration. But it's over the course of 10 years, and you can change how you're going to do it at any time. So yeah, I mean, you want to curry favor with this guy to basically get your short to medium term goals. Yeah, I mean, you ever when when you're negotiating with people, right? One of the things that you typically understand is how do you get them to soften up,
Yeah.
right?
Yeah.
And the way that you can soften Trump up is just praise Trump, like give him like, wow, Mr. President, you're the smartest guy in the, like I used to do that with my old boss. You know, this guy, I knew he was a knucklehead, but I was like, man, James, you like I would come up with an idea, but I'd be like, look, if I say this idea, this is gonna sound dumb. Like he's gonna, like he's not gonna approve it. I'm gonna have to justify the whole thing. So what I would do just to make it very easy, be like, man, James, that was a great idea you had about doing this. And he's like, yeah, you're right. I should have done that. Yeah, let's go ahead. So it was like just planted in his idea that it was, plant the idea that it was his idea from the get-go, and you get what you want anyway. So, so you string it up in a conversation and you just be like, remember that time where you spoke about this? That's a really good idea. Maybe we should do that. And it's like, yeah, you're right. We should do that. I am smart.
I think that's what not sorry.
No,
you guys in the comments, bro, every time. That's what Lutnick does, like every day with Kris or with Trump.
Kris admitting kissing ass online. Definitely, bro. Look, if you ever want to get anywhere in life in terms of like operating in a corporate structure, bro, you got to kiss some ass. Okay. I've kissed ass. All right. That's just how things work sometimes.
Yeah, you have to, bro. Like if you're in a lower position in life and you want to get to a higher position, there are people above you. You think you're going to get to a higher position by like not praising them and by just critiquing them? It's like, no, who would want to do business with you?
Dude, like I said, you just don't do it to the extent where they don't respect you, right?
Exactly.
So you have to have like times where you push back, of course. There are times where you have to be independent and say your mind, but bro, everyone needs to do what they need to do to accomplish the goal, okay, that you're trying to get to. If your goal is, hey, I want to move up the ranks, the last thing you're gonna do is, yeah, let me just speak my mind and criticize. Like, here's a fun example. Like, one of our VPs one day, me and him were doing an implementation, and I was working overnight. He was like kind of there just to oversee some of this implementation work. And he's like, Kris, like you're one of the guys who's like worked his way up from the bottom. Like, I see so many problems. Like, how do I fix them? I said, you really want my answer? He's like, yeah, sure. I said, okay, fire 2/3 of the chief radiologists that we have and fire half the directors and replace them all. And he's like, what? I said, yeah, I mean, you got a bunch of people that are incompetent. Like, when you just got to get rid of them. And believe it or not, some of these facilities, they would actually run better with less management. And he was like, man, you're right, but I can't do that because it's all political. And I'm like, yeah, because you got a boss too.
Yeah, it's all rooted in other people's self-interest. I mean, I think the best example publicly has been Elon and Trump. Elon wants autonomous regulations to go down on self-driving, and so what did he do? I mean, he's been kissing Trump's ass for the past 7 months now, right? Because the more he makes him feel better, the more Trump inevitably is going to give him what he wants. If Elon was out here critiquing Trump, he was definitely not going to get Harris to give him any favors. Like, now you have a world where Trump has the Tesla in front of the front lawn of the White House. Like, there's always a give and take.
Does no one see the coincidence? Tim Cook doesn't show up to the Middle East thing, and now all of a sudden Trump has gone apeshit on Apple. Like, does no one see that connection? I'm telling you, this is how it is. Trump is a guy where everyone in his life has been kissing his ass. And so if you don't kiss his ass, he's gonna basically think like you're a threat. He's gonna come after you. I'm not saying that's a good thing or a bad thing, that's just his personality. That's just how it is. So that's why, like, everyone around him, if you look at, dude, have you ever seen these conferences, like roundtables with the president? Bro, everyone in that room knows exactly what to do.
It is the most glazing of glazing you could imagine.
Oh, Mr. Trump, thanks to your leadership, we were able to blah, blah, blah. Your leader, without your leadership, water. I would turn on the faucet and the water wouldn't work, Mr. President. It's because of you. It's like, come on, guy. Come on.
Oh my gosh, dude.
What's funny is, and then Trump will be like, if anything bad happens, man, that Biden, he sure messed it up for all of us. It's like, bro, you did that. You did that. But no
Dude,
one in this cabinet will ever blame him. They'll just be like, yeah, that's the Biden administration.
Yeah, look, it's fair. It is fair. It's definitely a different way to interact with him as the president. All right, Kris, last question for you. Are you doing anything in the portfolio, buying anything, selling anything, hedging, or
No,
chilling?
man, I'm just chilling. Like, I'm looking at this, like, just from an investing standpoint, this makes sense to be in something like Venture Global, because if the Europeans do want to negotiate, they really do need a lot more energy from the US, just to basically safeguard their own industry. So if they are trying to reindustrialize, they're going to need more energy. And where are they going to get a lot of that energy? They're going to get it from the US, right? So it benefits the US, not to mention if the chief complaint that the Trump administration has is your trade imbalances is there, then there you go. Just Europeans buy more natural gas, our trade balances end, And if
Right.
you look at like the prolific importers of natural gas, it's primarily been the Europeans. So it makes sense to be in industries that'll benefit from that. So like Venture Global would be one. I do have, sorry, go
I
ahead.
was just gonna ask, Ackman's buying Amazon. Are you interested at all in that one now?
Yeah, I mean, my wife, like in her portfolio, I still have a bunch of Amazon there, and I have Google. Of course, I'm loaded up with Google and stuff. So I think the Mag 7 will figure out ways to make money regardless. So long term, they'll be fine.
Right.
The one thing, I don't know if you saw this, and I'm hesitant to agree with Meet Kevin, but Meet Kevin said if TLT doesn't hit $100 by October, he's gonna dress up like a clown and like have his entire house turned into like a clown house.
Wait, no, he did not say that. He did not say that.
Yes, he did. Chat, did he not say that?
He said if TLT does not, so he's really confident rates are coming down.
Yeah. His logic was that there's gonna be some sort of credit event that basically brings, I guess, the data points down to the point where people are going to be a lot more pessimistic. And
so he's calling recession. He's calling full on recession. Then that's what he's saying.
Sort of. I don't think he's calling a recession, but I think what he's calling for is, like I said, like some kind of like major credit event that forces the Fed to cut deeper than what the market is expecting right now.
Okay, but do you think that type of credit event that causes the Fed to cut would create a recession, or it would be like a little oopsie doopsie and we move on?
I mean, I'm looking at the private equity markets, and that's the part that's scaring the crap out of me a little bit. Okay, and the thing is, do you have that tweet from Bill Ackman from when he posted about Harvard?
Let me see if I can get it. He posted recently, like yesterday?
Yeah.
Okay.
I think it was yesterday. I think that is the key thing to watch out for, because let me send it to you on WhatsApp so you can play it for everyone. Just play it and then I'll kind of explain, and I think that should be it for me. There you go. I just sent it over.
Okay. Oh yeah, okay. Here it is.
Problem of the Harvards of the world is people think a $53 billion endowment, I don't want to use an untoward expression, it's sort of FU money, and it creates the opportunity for university independence, but it's not actually the case. So yesterday I read the bond prospectus for Harvard's taxable $750 million bond issuance, and a few interesting facts. So number one, Harvard has a stated $53 billion endowment, of which 80 to 85% of the assets are in private equity, real estate, and venture capital. Yale's marketing a $6 billion slice of their private equity exposure, and I guarantee you that that's the carrying value. I guarantee you that the transaction price is going to be a meaningful reduction from that number, which should cause, appropriately from an accounting perspective, Yale to have to remark their entire portfolio, and it should cause Harvard to do the same thing. Harvard's marketing $1 billion slice of their portfolio. So one thing I believe is that the private equity portfolios, the real estate portfolios, the venture capital portfolios are mismarked. And the
What's meaningful?
I would say 40% discount.
40%.
Yeah. First of all, every institution is completely full up with private equity. No one wants incremental exposure to private equity. So the next buyer cost of capital is meaningfully higher. My guess is Yale chooses not to transact, and Harvard may do the same because they don't want to report the figure. But let's just talk about, so one, the assets are invested in illiquid funds where they can't get liquidity other than by doing a secondary transaction. And the scale of these secondary transactions, there isn't enough capital interested in buying them, absent massive discounts. But it tells you what the concerns are. You say, well, how could Harvard have a problem? One, they have $53 billion endowment, which is mismarked. By the way, the marks are basically, the venture capital marks are as of the last round, which were done in probably 2021 for many of these businesses. The real estate marks are, were done before the Fed started kind of raising interest rates, and really the same, for private equity. So how has Harvard been meeting its obligations? They've been issuing debt. What's not talked about when you mention the $53 billion endowment is Harvard has $7.9 billion worth of debt. The most recent issuance was for a AAA rated institution, was in the 5% range. I mean, this is not a kind of a low sort of coupon. Now imagine you're a donor who's being cultivated by Harvard to give money. Well, where's your money going? It goes to Harvard and it goes out the door to pay interest expense to bondholders. My experience with charity or nonprofits that have large amounts of debt, it's a death spiral because the donor doesn't want to give money that they want to give to a project they don't want to give to kind of pay interest expense. Harvard relies on the federal government, on the alums donations, and a very small liquidity pool to meet their kind of ongoing obligations, and a draw from the endowment. And each of these has been meaningfully impaired. Donors are not excited to give money to the university, and they're going to be less excited once they understand what's the financial picture. The tax exemption is at risk, which means that tax exemption benefits the institution because they get they don't have to pay taxes. But I would say more significantly, the donor gets the benefit of a meaningful tax deduction in America when we give to these institutions. That goes away. I mean, it's a disaster. So they're under, I would say, quite severe financial pressure.
Okay, so the second part is more to do with Harvard and how they're managing their finances. But more importantly, one of the things that you're seeing in the PE world is with private equity, they take stakes in certain companies. And the thing is, you don't know what the actual real value, the carrying value of a company is. And what happens is when you look when investors are looking at you and saying, look, you bought this company and it's doing X amount of revenue and X amount of profit, and they give it a multiple and all this other stuff. What typically happens is, when you go to sell it, that's when the real price actually shows up. So it's not just, hey, you're valuing something at a certain price. And a lot of times it's things that you bought it for. So let's say you bought a building, like an office building in 2019, and you paid $500 million on it. It's sitting on your balance sheet as a $500 million asset minus the depreciation that you may have incurred in the last 5 or 6 years. The problem is office space, unless it's in like some really premium areas, it's not worth as much as anymore. So that office building, if you put it on the market, it could end up going for like maybe $100 million instead of 500. That is an 80% loss on your balance sheet. So imagine that in the business world. So there's a company that actually someone sent me yesterday. Let me just bring it up because it's one of those things that's kind of imploding in the background a little bit. The company is called, I'm doing some research on it. So if some of the stuff I say is like not as accurate, just let me know. It's something called CODI. Look that up. Compass Diversified Holdings.
Okay. This is a kind of parent. Yeah, I see it right here.
So they own like a bunch of like smaller brands around in the US, right? So essentially what they're doing is they take money from investors, they take that money, buy up these smaller companies, improve them, do whatever, and then they sell the company into either the public markets or to other PE firms. And there's this game that's been played in the background that no one really talks about a lot. And it's basically PE firms selling portfolio companies to each other and marking up the value of the
Ah,
okay.
that could be a little bit dicey.
So normally it's not that bad. Like, they'll just eventually they'll make these companies go public or the whatever. But the liquidity events are becoming much, much harder. And now, especially when you weigh the cost of capital, like you can get a 5% treasury yield. That means it's a pretty big hurdle rate for that specific business in order to be valued at a X premium. So this is the challenge that you're running into, where the world of higher interest rates means the valuation on a lot of these companies is a lot lower. So if you look at the Russell is down significantly. Why? Because a lot of these companies have a ton of debt. They don't have huge profit margins. But the market is actually determining that, right? So the market is saying, like, look, this company is worth X. A lot of these PE firms, they're holding these businesses on the balance sheet as like pretty much like they're overvalued companies on the balance sheet.
Yeah.
And so if what happens if one domino starts falling, then another one falls, and then you got trouble. So like
Okay,
right now,
but unlike mortgage-backed securities, these are actually legit companies, even if they're overvalued on the balance sheets, right?
right. So like that company that we just spoke about, they're restating financials right now, and they took a huge hit. Like, look at the stock price.
Yeah, I just saw it right here. Yeah, there you go. From 17 to 7.
So now this is a very small company. Okay, don't think that this is like a canary in the coal mine or by any means. But it just means that a lot of companies, especially in the PE world, if they were really trying to determine what their actual value is in the portfolio companies that they manage, it wouldn't be nearly as big as it is today. So there hasn't been any sort of major liquidity event that's basically caused the fallout of this. And one of the challenges, though, is that, and this is where the Trump administration, I hope they don't fall for it, they're trying to get retail investors to bail these guys out. Did you see that?
You're saying these private equity firms are trying to pump the stock to retail to get liquidity.
Yeah. So go to just type in Google private equity retail investors.
Oh yeah, BlackRock's saying it. There's a bunch of these websites that are saying, yeah.
So what they want is like investors, like 401ks and everyone else, to invest in private equity companies. That's like, what? Like, no.
Yeah, what is the benefit to a retail investor getting into private equity?
Superior returns, quote unquote. Okay.
I mean, potentially, right? Okay, so your argument is they're trying to put the bag on retail.
Pretty much.
To get out of these crappy valuations here.
Yeah. And the thing is, like, retail will buy anything, apparently, according to them. So they don't have a lot of respect for retail. So they're doing everything. They're trying to do everything they can to basically, get some sort of liquidity out of this whole situation. Someone said KKR. Bro, I know KKR, Apollo, BlackRock, not BlackRock, Blackstone. All of these guys, they're all in bed with each other, and they've been basically like playing this game of like, like I sell you this, you sell me that, and we'll just both be happy together. So,
bro, these stocks have been horrible. KKR is down 20%, Apollo's down 20% year to date, and then Blackstone stock, is this one also down 20? This one's down 21%. They're all like, you got something here with this whole private equity thing. There is something going on.
Yeah,
I mean, the market's not giving them any level of recovery from April either.
Yeah, so like I said, this is something to just be careful of. And the thing is, these guys also do a lot of the pumping into the general economy, right? So what these guys could theoretically do is go to their portfolio companies and say, you need to become more profitable. Okay. You need to figure out how to make more money, because this way we can say that, look, we've got a profitable company on our hands. Now, how do you do that? Well, the easiest way is you fire employees. You become more efficient. And what does that do if you start firing a whole bunch of people? Yeah, it'll raise your profit margins, but it's also going to mess the economy up because you're going to get mass firings, and now you got a giant slowdown, right?
Right.
So this is where we have to just keep our eye on these guys and make sure that we're not seeing extended amounts of layoffs because of private equity just messed up. So,
but you don't think it's at the level of mortgage-backed securities in 2008? Not there yet.
I don't think so. This is much more of a like mortgage-backed securities back then. They were built on complete fraud, right? Where basically people were issued mortgages that they couldn't afford. They weren't checking if they could actually pay the coupons that are out there. I mean, there's something happening in the background that's very similar, but it's a little bit different. So have you heard of something called pretend and extend?
No.
Okay. This is in the CRE world, but remember that analogy
that's commercial real estate, right?
Right. So and it's same thing with multifamily too. So multifamily is considered commercial real estate. Okay, so imagine right now you own a building. You bought it for $500 million, and you were paying a 3% coupon, right? Now all of a sudden the interest rates go up, and the new debt that you would theoretically issue to them would be 8%. And for them, their business is not doing as well, and the money is due. So instead of saying, "Hey, listen, I need my money back," they'll just say, well, technically you didn't default. Like it's fine. We'll just extend your loan further, And the reason why is because they don't want to take ownership. So a lot of these building owners, they're just like playing games like, oh, you want to charge me an 8% interest rate? No worries. Why don't you just take the building back, and go sell it to get your money back? And basically, they know that the banks and these other companies that basically lent them that money, they don't want to do that. Because then they'll have to report that as a major loss on their balance sheet. So instead of calling in the debt, they'll just be like, pretend like it didn't happen and let's move on. And, just keep the current rate that you have. So,
yeah.
And 20 years ago. Yeah, sorry.
Yeah, I mean, people in the chat are definitely saying they've heard this before. The interesting thing about this is we forget Bank of America is sitting on $300 billion of paper losses due to the Fed raising rates in 2022. It's just their stock has gone up because the expectation has been, hey, rates will come down. They'll never have to actually recognize those losses. But the more time we wait, I mean, eventually it gets worse.
Yeah. It's the challenge is that the general public and everyone else is not necessarily as aware of a lot of these things. Now, there were points in 2023 that this did come up with the regional banking crisis, right?
Yeah, exactly.
So when people had a run on the banks, essentially now you had these guys that issued all these loans for super, super low rates. Their entire business is getting challenged because now they have an illiquid product. So right now, imagine, you lent something to somebody. Now your investor comes to you and says, hey, I need money. I need my money back. How do you get that money back without causing massive amounts of losses, like paper losses going into real losses, if investors do that? So that's the challenge that you run into. Even the Qatari investment funds, like they're one of their main officers, they kind of mentioned this too, which was, hey, listen, private equity, you better get your stuff together. This game of, is coming to an end. So I don't know. Like we just have to be very careful. Just be very careful.
Yeah.
And like I said, the longer term implications of this is that if these private equity guys, they curtail their investing in portfolio companies and they try to preserve liquidity, and like I said, other people, investors, they don't put money into these private equity firms, what ends up happening now is that that's less capital that's churning around in capital markets. And that means that less hiring, less people getting jobs. And so business activity slows down. So it's all about the liquidity, so if you take away liquidity pools, that's what's going to happen.
Right.
Yeah.
Kris, thank you. Appreciate it, man. Kris's Twitter right there in the chat. Are you doing anything over the weekend?
Nah, man, just hanging out. Might go see some houses with the wife. You know, yeah, we've been, like I said, we've been in the market to buy, and it's kind of sad to see that when we go, most of the people looking for homes are not actually like young single people, not single, like young couples with kids.
Yeah.
It's mostly like boomers. It's like, come on, man. Like, I don't want to sound negative about it, but the thing is, like, this younger generation, it's really, really hard for them to buy a home. Like, imagine being in your like 30s and you're literally like doing everything right. You're saving all this money, and you're getting outbid by grandpa who, who's basically like finding a home that he's gonna die in. You
Yeah.
know, it's like,
I mean, well, they're selling their S&P that they bought 30 years ago to buy these houses, right?
I mean,
And
I don't know. It could be. It could very well be that. Just like I said, it's kind of sad to see that the younger folk are not like not preserving like neighborhoods and stuff. You know, they're all the crowd, they're just becoming like renters, you know? So if you look at there's a chart that was posted on Twitter, I don't know where, the median age of home buyers right now is like 56.
really? That's dude.
Yeah. Yeah, it's insane, dude.
Oh wait, no, the CNBC reported that a couple of days. Yeah, that's correct. Yeah, right here. Median age 56. Yeah, here it is. Damn, bro. That's wild. That is actually wild.
Yeah. I think Dougie actually mentioned this too. So a lot of people are like, well, how come they're buying homes at this late stage? Like, they're buying it for like investment purposes.
Yeah.
You know, and the thing is, like, you kind of also don't want to live in a neighborhood where it's just a bunch of people who are like renting. As I mean, my own personal experience is when it comes to renting, a lot of people with that rent, neighborhoods that have traditionally have a lot more rentals, they just don't care about the neighborhood nearly as much as someone who's actually like bought a home and they have like skin in the game a little bit. If you're a renter, you know, like that's why like some parts of the country they're banning Airbnbs, because like some people buy these homes, turn them into Airbnb rentals, and basically they're like party houses and ruin an entire neighborhood.
So okay, but hold on. How much are you trying to spend on this house, bro?
I mean, my budget keeps getting higher and higher. not because I'm getting richer, okay? Like, don't think like, oh my God, Kris is making more money, so his budget's going up. No, it's because every time I look for something decent, the price just keeps getting higher and higher.
So what, you like $1 million is your cap? You want to spend $1 million?
I want to spend under 750, okay, but that's like a want, not necessarily like what we're gonna get. And my one of the focuses that I have is that I'm gonna end up having my in-laws live with me.
Wait. The why?
Because they're old.
Oh, so okay, so that changes the dynamic though of buying a house if you have 4 people in the house.
Right. And so that's the other thing too. Like, we saw a house last about 2 weeks ago. I really liked it. Like, it was really nice, but it had a lot of stairs. And because of that, we kind of decided not to, because my mother-in-law has like a knee problem, so she can't really get up the stairs as well. And there's no like bedrooms on the first floor, so all the bedrooms are on the second floor. So we'd have to get like either one of those chairs installed or an elevator installed and all this other stuff just to make it work.
Yeah.
And so instead we were like, let's just find something where either there's a in-law suite on the main floor that makes things a little bit easier, or some like a room on the main floor that basically we can convert into a bedroom if necessary. Like, that's what my brother-in-law did for them as well. Like, he bought a house, there wasn't a bedroom on the first floor, so what they did was they converted, like, I think it was like a den into a bedroom, and they remodeled everything and they attached a bathroom to it, and so then it ends up working well. So it's really hard to find homes that have like exactly what you're looking for when it comes
Everyone's saying 750K is not enough to get anything, but Kris is in Georgia.
Yeah, I'm in Georgia.
750K I think can get you a decent chunk in Georgia.
Yeah, it depends on which neighborhood you go in Georgia, but once again, I'm finding it harder and harder to find better homes for that price. Like believe it or not, some parts of Marietta and even Alpharetta, like 4 years ago, You could get it like a 500,000. You could get a really nice house.
Yeah.
You know, now it's not really the case. And the other thing is like there's parts of the counties that like so the way that like people buy homes in Atlanta is that there's like the northern part and then the southern part. So northern part of Atlanta is all like suburban, uber wealthy. You know, they've got great schools over there, and then like the rest of Atlanta, which is like really bad. Like you go to the airport in Atlanta, bro, it's bad. Like you're gonna get, it's really scary. So a lot of people, what happens is they'll get really good jobs and they'll all move to like the nicer parts of Atlanta. And so those areas, if you look at them like Buckhead, Sandy Springs, they are on another level of wealth. And then you just literally go down the street and not down the street, but like down a couple of zip codes. And it's like, oh, what the hell just happened? You know,
Dude,
so, yeah,
these are like this place in New Jersey, this 1.95 million, this would be like $8 million.
I don't think you're in the right. You're not looking at the right thing. So you have to look at Atlanta and you look at Buckhead. That's not it.
Okay, Atlanta, Buckhead. Oh, here you go. North Atlanta, Buckhead, Atlanta. Yeah, there you go.
There you go. So this is what you're gonna get. Like this is like one of the more wealthier parts of Georgia. And then you go like a little, if you go further up, like remove your boundary.
Oh, sorry.
Yeah. And so if you just kind of scroll around, you're going to see all the stuff that's around there and like what kind of homes you're going to get.
Dude, these are really rich. This is like Asbury Park in New Jersey. That's like the richest part of.
Right. And what's funny is go down slightly to like keep going down a little bit and then go to like not Vinings. Yeah, like that's where the airport is. Look at the houses around the airport. Further up. Like right there. Scroll into it and go down slightly.
What's his name? Vining, you said? How do you spell it?
Not Vinings, like what's like Bankhead. Type in Bankhead. Or College Park.
Oh yeah, these houses are 400 grand. Yeah, that's different.
You know.
Yeah.
Like a lot of these homes are like trap houses, bro. you don't want to freaking go there. You don't want to.
So hold on. So you're trying to spend $750. You think you're gonna actually be able to spend $750, or you think you're gonna have to?
No. Like I said, that's what I want to spend. It's not what I'm probably gonna end up spending. I'm probably gonna end up being closer to like $850 to $1 million, probably.
Bro, why don't you just sell all your Google and get like a $5 million like nice spot?
Nah, no. I'm not dumb, bro.
Dude, get like a good spot. I can come over. Like it'll be like, you know, like splurge a little bit. Look at this. Just pay it in cash, bro. You have the cash. You can do 4.5.
No, bro. Like I said, first of all, I don't need to like what is it called? Like keeping up with the Joneses. I'm not about that life. You know, I don't need to buy a big home just to be like, oh my God, look, I have a really nice house. You know, I've never been that. And I don't think I could ever really, really get into that mindset, you know.
Bro, why don't you come back to New Jersey, do the podcast with me and Steve in my new apartment, convince the wife. You don't have to be New York. You be New Jersey. New Jersey is really nice.
There are parts of Jersey that are not bad. I'm not going to lie. There are parts of Jersey that are not bad. But you know what? Not being on that goddamn turnpike is 100% worth it, bro. 100% worth it. Yeah. I'm looking, like, if you want to look on the map, I'm looking at something like Marietta, which is a little bit more affordable. Like, I want like a medium-sized home, something with like a little bit more space. So I'm looking at something with, you know, like a 1/4 acre. So my only real like requirement outside of a good school district is that like I'm not living in one of those like cookie cutter homes where literally like you open a window, like a side window on the house, and you're staring at your neighbor, you know, taking a shower. Like I just want some distance. So I'm trying to find something that's in a cul-de-sac, and yeah. Don't worry. When I get a house, bro, more than welcome to come anytime you want. You got a place to stay.
Yeah, we got to do a Georgia meetup. So
yeah, like the place I'm looking, I think in the chat is East Cobb. So probably like East Cobb. My wife, and the reason why East Cobb and not like West Cobb is because my wife works near East Cobb. So
All right. Have a good weekend looking for these homes. Thank you, Kris. We appreciate
yeah,
you.
Johns Creek's really nice too, but once again, too far away from my wife's job. So it's probably going to be, like I said, everything is. And by the way, that's the other thing you have to consider too, like how far away you want to buy from where your workplace is. For me, I'm remote, so I could work from anywhere, but my wife has to be there. East Cobb was swanky in the 90s. East Cobb is still swanky.
Yeah.
Yep.
All right, Kris. There's Kris's Twitter. Have a good weekend. And there's no market on Monday. So we have a long time to not think about stocks.
Yeah. Well, it just means that we got to do more research.
That is true.
Find out what's going to break. Because that's the feeling that I have right now with all the volatility that we have. We could get a 2023 kind of event that's very short term in nature, but it causes the markets to panic.
Yeah.
And that's what we need to find, because that's where real opportunity is. Like, dude, you know how much money we made on freaking TFC? Look at that. That was like a nothing burger, and we made a buttload of money.
That was the first moment I was introduced to what it means to buy a dip with conviction and make so much money when people realize there's no reason for it to dip.
Yeah, literally, it was like $27, and we were looking at some call spreads at the time. They were trading for like $2 with like a 7.5 times return on the money, which is, if you think about it, kind of insane.
And all it had to do was revert to the mean. That's it.
Yes, exactly. But like I said, you just have to be data centric. And I know plenty of people in the chat, like they're you just have to find these opportunities. By the way, can we just quickly talk about Enphase? Not to throw shade at anyone.
You can talk about whatever you want to talk about. This one is getting hit pretty bad. Yeah.
One of the arguments that literally people have made and that I've seen in the comments for like the last couple of years. Stop looking at politics, bro. I hate politics. Just talk about investing. And I really wanted to tell people, like, look, man, as much as you want to disassociate politics from business and investing, you have to stay in tune with what the politics are like. Because if you don't, you're going to get flat. You're going to get caught flat-footed when some sort of legislative change comes around and destroys your business model. And that's the thing that you really have to keep your eye on when it comes to politics. Do I enjoy watching politics all the time and speculating based on? No, of course not. No one wants that. Like, that's dumb.
Yeah.
But at the same time, I know that one policy change could have a really big impact on the industry that I'm investing in. Now, one of the reasons why we were able to make so much money on TFC was because we saw that, hey, regional banks were crashing, but then, the federal government came in, the Fed came in and said, oh, we're going to set up this thing called the BTFP where you can store your assets and get liquidity. And now all of a sudden your valuation on those things that you would have had to sell at a loss, they're no longer a problem. And boom, the stock rides higher. You made a crap ton of money because you kept your eye on the prize and you understood what the policies were around this. So I think when it comes to being an investor, regardless of, hey, you just want to look at things in a bubble and say, look, I just want to be focused on the business. Half of business is about the regulatory environment in which those businesses operate. Right now, the tax credits on Enphase were taken away. Right?
Dude, here's my thing. If you're an Enphase investor and you didn't know that potentially yesterday, if the bill passed through the House, that was in the bill, then you were blindsided completely. And that means you had to care about politics because you had needed to know if the solar subsidies were in the bill or not, right?
Yeah. Same thing, like I'm telling you, the same thing with like VG right now. The reason I'm bullish on natural gas, this administration's doing press conferences in front of what are they called? In front of these LNG terminals. David Friedberg had this entire 1-hour interview with Doug Burgum in front of Cheniere's LNG plant. Like, it tells you the administration is pushing a certain agenda. And if they're pushing a certain agenda, that is what's on the menu in terms of growth. And if they're anti-solar, they're thinking that, hey, if the president of the United States is calling this thing the Green New Scam, bro, do not be in green technology.
Yeah, I mean, when it became obvious Trump was winning, like it doesn't take a rocket scientist to be like he's not going to be a fan of anything related to the environment.
Yeah, yeah. It's like I said, it's a very interesting dynamic. And like I said, now these days, I think in the olden days, like in the let's say 50s, 60s, 70s, information wasn't nearly as available to us. Like
Oh,
you'd
no,
learn,
no one can say that. No one can. The information is everywhere now.
yeah. So I think even like some of the chatter that you hear on CNBC, they're like, look, retail investors, they're doing really well because they have more access to information today than even like the main guys who made a crap ton of money in the 1980s and 90s did.
Yeah.
Like because and that's the key, right? Following guys like you and Chris Camillo and all these other guys, they're making money using social arbitrage, which is just finding things that the other people are not looking at, investing in them before the other guys don't, and boom, now all of a sudden you're making a crap ton of money because you recognize a trend earlier than these other guys who have like giant investment committees, like 10 guys sitting around. Hey guys, what should we invest in next? You know, you'd be better off following Chris Camillo on freaking Twitter than following like an investment committee of 10 dudes who basically are disconnected from reality.
Right. 100%.
I mean, look at how much money you made on Robinhood. Why? Because you saw the value in this thing. You saw all this stuff going on. You know, it's like all these guys that have made money on hymns. You know, how did they make money on hymns like 5x return and Warren Buffett didn't?
Well, see, this is what I love about Hims, even though I don't own the stock, and it's what I said on the Hims House podcast. It was all crowdsourced due diligence. Hims is not. I don't say Hims is a meme stock. I know it acts like a meme stock, but it's cheap. Even at $55-$60, it's cheap, and you had to believe that their growth actually was tangible, it was reoccurring, et cetera, and go against the Bank of Americas that were saying that it was a stupid company worth $20. But that's if you followed people on Twitter that talked about Hims, which is retail.
Yeah, yeah. I think it's like I said, right now the age of the retail investor is here, you know. And the thing is, if you find the right ones that are actually doing a lot of good due diligence, you make a lot of money. And if you follow the wrong ones, they'll get you in a lot of trouble too.
Yeah. Oh,
So
100%.
like the thing with the whole Meta Planet thing, bro, there's a lot of influencers that are pushing that thing. And I was like, damn, bro, what the hell? Like sometimes I feel dumb. I'm like, how am I missing out on this thing? But then I'm also like, I don't really understand the business. So I'm going to stay away from this.
Chris, do you know this was trading at 10x a premium of their net asset value of Bitcoin?
No, I didn't know that. I just saw people kept posting about it, dude.
MicroStrategy trades at 2x, 1.8. You were paying $10 for every dollar of Bitcoin in MetaPlanet. Like, I just don't understand how people got obsessed with that being a good idea and thinking, yeah, that's our next big play.
Yeah. Yeah.
I mean, it's tough.
Yeah, it is what it is, man. It is what it is, you know. So, and sometimes retail gets it wrong, like I did. Like I'm still
I get a
technically
ton of things wrong. Yeah.
like Palantir, baby. I did not see a 10x coming, bro. Did not by any means see a 10x coming. You know.
I didn't see that. I didn't see it coming this soon. That's it. And so now that's why I'm just like, dude, we don't need to go up. We just need to hold it because there's a lot of retail sitting on gains. And if we can hold these levels, marinate it, you know, it'll be better over the long term. Are you seeing any tech stocks that you like right now besides Google, or it's just the Mag 7 for you? That's it.
I think it's just the Mag 7, you know, minus Apple. I'm not as positive on Apple because I don't know. They're just in terms of like the growth, they're not really growing as much anymore. Their PE multiple is still really high, and their main draw is we're just going to do a bunch of share buybacks. You know,
Which is,
so
yeah.
I don't know. It just doesn't seem like an extraordinary returner right now.
So Google is kind of your and I mean I think I got your IO reaction, which is that it was a little boring in the presentation, but the substance of what they announced proves that Google is an AI company. No matter what.
Yeah, pretty much. You know, even Meta, like, you know, they're always trying to do more innovative things and, you know, creating new things. And Apple, it just doesn't seem like they're doing that much, you know?
Yeah.
So it is what it is. I bet. Yeah.
All right, Chris. Appreciate you. Have a good weekend.
Have a good one.
See you next week.
Take care. Bye.
See ya. All right, folks. Markets are pretty much flat, dude. This whole Trump 50% thing, it didn't matter. At least not today. Nvidia's at 130. Palantir's green. I think before the long weekend, we're not going to get any crazy volatility up or down. We still have, a few hours left in the day, so I'm assuming we'll see some moves. But Hood's holding 60 really nicely. My mom just texted me. She said her covered calls are printing on Hood. Look at this. This is great, dude. This is great. This is so awesome, bro. She's like, look, I made $275 in 3 days. There you go. 91% up on her covered calls. It's cool, bro. It's cool. It's a little bit of a choppy market, so there are ways to benefit from the volatility. But if you did have some covered calls that were underwater today, they're kind of saved, at least to an extent. And they got saved by a couple bucks. It's not like, the stocks are down 10, 15%, and that's the reason they're getting saved. It's really just flat across the board, if not a little red. Is your mom using the term printing? I need to teach her that one. Dude. I love it, bro. I love it. Because my mom and my dad are getting close to retirement, And I want them to be able to be at home and have a large portfolio and be able to do things with it. And if they can sell some far out of the money calls on some of their positions and generate a little bit of income every week, like that's not a horrible thing. And they like it, they're interested in stocks now. They care about it. They didn't know about the stock market or financial media for like their whole life for 50 years. And so now my dad watches so much news. My dad knows more about the trade stuff than me. Yesterday, he told me something about India. I was like, really? That happened? He's like, yeah, I was listening to it. I was like, dude, he is, and I'm in the news all day. So it's something that's like becoming a hobby for them, but also something I think they could benefit off of if they, care about it a lot more. Elaine says covered calls are why I call my Palantir shares my golden tickets. Yep. Elaine has a lot of Palantir shares and she's able to sell super far out of the money calls on them every week. And, the premiums on Palantir are really good because people think it's going to go to 150 every week for some reason. And it is what it is. And you're able to benefit from that volatility. And when you have a lot of shares, obviously it adds up really nicely as well. What else? Thoughts on NVIDIA before earnings? I think it will do well. I don't think it has to pump because it's already pumped 30% from the lows, but I think they will beat and raise. I think even with the $5 billion charge off, they're going to put up like $44 billion in revenue. And if they can put up like around 90 cents of EPS, then I think that would be pretty decent. Bessent's going to be on at 11:30. We heard from Bessent already today, and it was kind of a nothing burger. I guess we can see at 11:30 what he says, and if there's anything that's going to be important there. He'll probably talk about those EU tariffs now that he had a couple hours to think about it. What do we think Bessent's going to say about the EU tariffs? I think Bessent's just going to be like, President Trump creates strategic uncertainty to be able to strategic uncertainty was the phrase he used last time. It's going to have to be something along, hey, we need to work with the EU. Well, he was talking to Germany yesterday, so I think he's going to divert the question and say, hey, I've been talking to Germany. We're having productive discussions. 50% is ongoing in negotiations, yada, yada, and probably try to just play it off. I think that would be his route. Why is MicroStrategy dumping today? Well, Bitcoin is down from 112 to 108. But also, again, I think MSTR is selling shares at the money to buy Bitcoin. 5.6% down. I mean, maybe it's down because of Metaplanet as well. Now, look, to give Metaplanet a little bit of credit, some of the DD I read about this is that Japan's 30-year and 40-year bonds are basically failing. They can't get any bidders, right? And so one of the reasons why people like Metaplanet in Japan is because it is a counter-cyclical way to get access to leverage. So this person right here says, nobody wants IOUs from a fiscal meth addict with 250% debt to GDP ratio in a central bank that's monetizing bonds like it's running a counterfeit Pokemon card shop. This is a guy in Japan who put this out yesterday. So it's like there are some people in Japan that are saying, hey, wait a second. It is one of the only ways to get access to leverage in the country outside of buying Japanese debt. And then Bitcoin is super volatile. That creates a thesis. And then it's short. I think it's like, 30% short or something? So there's not a lot of shares available. And that puts everything together to come up with a thesis. The problem is that's good enough for a pump, but is it good enough for like a 10, 20x like some people have been saying on social media? I don't know. It was good enough for a 2x, and then that 2x basically just went away for a plus 30% week which is still good. But the problem is most people bought at the height of the 2x, which is not good. So like the thesis is not crazy. It's just that it's just the expectations are insane. And that results in a lot of people chasing. And I think that's why it got hit as badly as it got hit today. I don't know why GameStop's green either. I didn't see any headline on that. So this one up 4%. It was up 10% yesterday. There is I saw some tweets that people are saying Roaring Kitty's back in the stock, but obviously there's no evidence of that. Even if he was back in the stock, I don't know if that's going to move it because, who cares? Like remember when he was in Chewy and then he left after like a couple months, but like he pumped Chewy and then he left. Like, I don't know if he has as much influence or if people care anymore about him being in the stock. I think it would pump for a little bit, but then people would ask why or why does it matter if he's there? AMC is also up 10%. Yeah, see these memes for whatever reason. No, AMC's down. I think it's up 10% for the week. Yeah, but it's down today. They're getting a little bit more excitement now. I wouldn't buy Oklo here, dude. Oklo already got its pump. So Oklo, again, is chasing. Like, could it go higher? Sure. And is there a real company there? Sure. It's up 26%. But, I mean, like, the time to buy it was at least 10% ago. Or 20% ago. Versus at 23% up. I bought 400 of MSTX today at $39. Okay. So one thing I've been trying to learn more about is MSTY and these yield max income strategy ETFs that I kind of think are weird. The reason that's down 5% as well. The reason people are buying these is because they give a crazy dividend for those that have heard of it. But the reason they give a dividend, like a 10% a month dividend, like if you put 50,000 in, you get 5,000 in dividends, right? Sounds kind of too good to be true. 5,000 a month off 50,000 investment. Like that's a little weird. But the reason they give that dividend is because, from my understanding, and correct me if I'm wrong, if they're giving like a $2 dividend, the price of the stock goes down by $2. So they're taking $2 from the underlying. So for example, this 21.84 would turn into 19.84, and then they're giving you the $2 in cash, which means you're losing $2 on the shares. And you're hoping that you have such a good average that you bought in way before these $2 deductions keep happening or whatever it is. And your margin of safety on the share appreciation is strong enough to be able to handle the $2, $3, 2%, 3% reduction from the stock itself. And if the stock keeps going up because people keep buying it, then obviously if you buy it at 21 and it's at 50 and they take off $5 to give you a dividend, if your average is 21 and the stock's at 45, even if it's not 50 anymore, you still keep that $5 in dividends. Now, maybe I'm not explaining it as well as it needs to be, but there's a lot of people. Like, let's look at the AUM on this. The AUM on MSTY, and there's a lot. They have this for AMD. They have this for so many companies. YieldMax is the company that makes these things. The AUM on MSTY. Oh my! All right, someone's got to guess. Someone guess. I didn't even know this. Guess how much money this ETF has under management. I cannot believe what I'm looking at right now. I thought it was 1/10 of what it is. This is like, this is crazy, dude. This is wild. Matt says 2,000 shares of MSTY is giving me almost 6,000 a month in dividends. That foots my 4,000 a month daycare bill. I have 2 kids, and let me put 2,000 into VOO or other stocks. Okay, so Matt, you're getting $6,000 a month from these 2,000 shares. What's the catch? Can you educate us? What's the catch? Like, how are they giving you 6,000 a month? They have to be taking it from the underlying, right? Like, where is the part that we're not looking at that actually, people have to be concerned about if they're getting that dividend? Someone said 100 million. Someone said 1 billion. Someone said 85 million. The answer is 4.04 billion. 4.04 billion. Dude, most ETF, I think NVDL, which is like, NVIDIA is like the biggest stock in the market, right? And that's the 2x leverage fund. I think this one has 5 billion, which means MSTY has almost 80% of NVDL. NVDL AUM is NVDL is 4.04 billion. It is exactly the same amount as MSTY. Think about that, bro. People are betting on MicroStrategy's dividend yield index fund over a 2x leverage play on NVIDIA. Like, that is wild. NAV erosion is the catch. Taxes and I may lose all my money in NAV, so it's the risk I'm taking. Taxes and I may lose all my money in NAV, so it's the risk I'm taking. Okay, so definitely there's taxes, but that's whatever. You may lose all your money in NAV. I think that's the underlying risk. The net asset value going down on MSTY, which I don't think there's any net asset value other than MicroStrategy stock, right? So the net asset value of MSTR going down, aka the Bitcoin premium being taken away. So it's basically okay. So it's basically about MicroStrategy. If MicroStrategy shits the bed, so does MSTY, and then the amount they can give you in that sort of special dividend seems like it also goes down as well. Okay, let's see if Grok can help us here. Tell me what are the benefits and downfalls of investing in a yield max ETF like MSTY. Let's see if Grok can give us something here. Okay, benefits, high monthly income potential. That's what Matt was just talking about in the chat. They use a synthetic covered call strategy, selling calls against MicroStrategy to generate premium income, which is distributed as monthly dividends. This can result in exceptionally high yields. Right now, they have a dividend yield of 123%. Again, that's why people are getting attracted to it. So a $10,000 investment could get you $9,200 in dividends. You get exposure to MicroStrategy, you get enhanced cash flow, and you get more risk-adjusted returns. The downside is your capped upside potential. The covered call strategy limits MSTR's stock price, or the MSTY stock price if MSTR goes up immediately. MSTY's performance is tied to MSTR, which is highly volatile due to its Bitcoin exposure. NAV erosion. Okay, this is the one I was looking for. High distribution rates often include return of capital, which reduces the fund's net asset value over time. This can erode the principal investment and lead to dividend compression and making the yield unsustainable long-term. And it's saying that people have described it as a short-term yield trap, highlighting how NAV compression can undermine long-term wealth building. Okay, that actually makes sense. Grok said it's going to zero. And then they have a high expense ratio of about 1%. Dude, but that's pretty attractive to the average. I mean, if you can put in 50 grand and make $5 grand a month, I mean, no wonder they got $4 billion in AUM. A lot of people would take up that offer, especially if you believe in MicroStrategy. And Bitcoin's been going up, right? So you kind of believe that MSTR will go up with it. And so that maybe mitigates the risk. I can understand why people are attracted to it. But I also feel like it's a very attractive offer that can easily have their NAV eroded, basically what's happened to Metaplanet today. And then you're stuck with the underlying if the dividend gets compressed. If they can't pay you a good dividend and you're stuck with the underlying, I mean, no one wants the underlying. What's the point of owning this? There's no value to it other than the dividend you get. There's a lot of different stuff happening in this new market, bro. So many different ways that people are finding exposure to yield from. And in the face of all that, the Mag 7 are trading at their cheapest multiples in 2 years, which is pretty wild. All right, we'll get Bessent on pretty soon. Let's get another update on some of this EU tariff stuff, and we should have Bessent in about 7 minutes.
Who is negotiating with the EU? He is negotiating with Apple. Look at this tweet here this morning, and you can see the tell. Our discussions with them are going nowhere. Therefore, I am recommending a straight 50% tariff on the European Union starting on June 1st, 2025. There is no tariff if the product is built or manufactured in the United States. Thank you for your attention to this matter. So, David, obviously, this is not a legally binding social media post, right? And for the president to say he's recommending such a tariff, obviously he's not implementing it until we see legal paperwork on that. And the question here is, who is he recommending it to, right? I mean, he's the ultimate decider. Generally, your staff recommends to you as the president of the United States what your options are, and then you, the president, decide what to do. For the president to say he's recommending that, it's sort of like throwing it out there into the air. I've got this idea of this. I think this should be seen as a preview of this call, which we expect between U.S. Trade Representative Jamieson Greer and his EU counterparts at 11 a.m. East Coast time. This is, I think, the president trying to create some space for Jamieson Greer to demand a better deal from the Europeans in that call. We'll see if it's effective, but I can tell you again, the White House views the overall stock market as overreacting to what the president put out on social media this morning.
Well, I think it's a reminder, Eamon, that the president can do this, right? I mean, and we were in de-escalation mode, and now we're in escalation mode. The market doesn't like that one as much.
Yeah, I mean, at least rhetorically, right? I mean, He hasn't actually escalated anything, but the rhetoric is a little hotter this morning. Absolutely.
That's why some critics this morning, Eamon, sort of allege that it's an attempt to distract from the dinner last night with buyers of his crypto asset. Do we know anything more about that, or who was on the list?
They did have that dinner last night in DC. So if you were a top 200 holder of the Trump meme coin, you did get invited to a dinner in DC last night.
We don't have a full list. And Caroline Leavitt, the White House press secretary, was asked yesterday if the White House would put out a full list. And she kind of ducked the question and said she'd look into that. The White House has said that that was the president on his own time, attending to his own business, and therefore it's not for the White House staff to put out the list. But that was a transaction that we have not seen American presidents engage in before. The president selling access to himself through his own family's business for a dinner at his own country club. And other presidents would have blanched before doing that. This president feels it's entirely his right to conduct personal business while he is president of the United States, and he's doing it.
Okay, we've got more on that dinner a little bit later, some color on what happened there. Eamon, thank you very much.
You bet.
Eamon Javers. Look.
All right, so we'll get back to that in a second. In terms of markets, we are still relatively flat. Robinhood right here, 63.47, not too crazy. I found this post on MSTY versus MSTR, and this guy right here says, if you start with 1,000 in both MSTY and MSTR, assuming a one-year holding period with all MSTY dividends reinvested into additional MSTY shares, MSTR would give you $2,084 after 1 year. MSTY would give you $1,800. And then he goes deeper into explaining why this is happening. So I'll put this post in the chat for anyone who wants to read it. But I think the cash flow is what people are attracted to on MSTY more than just like the net returns a year from now. And I think that's why people are more likely to get excited to invest in it. Angel, thank you for being here. Thank you for the $5 super chat. Happy Memorial Day weekend to mid and chat. You can use Memorial 20 for your 20% order at Bender's Bakery. Angel, for those that don't know, is a member of the community. He has an awesome bakery website for doggies. So if you have a doggy, you can check it out, Bender's Bakery, and he's giving you a nice little 20% off your order. He doesn't sponsor the show or anything like that. He's just a small business owner who's been early Palantir and been part of this community for many years. So shout out to you, man. Thank you for this discount code right here. I think I have a friend, I got to send you a picture, Angel, who ordered some of these, and they sent me a video of their dog jumping up and down because of how much he loved them. So I'll send that to you as well. But yeah, if anyone has a doggy, bendersbakery.com. You can check it out. There's Angel with his nice little dogs. I really want to get a dog in the new apartment, but I'm also like, I am going to be gone like every day. And I don't think I'm going to be able to take care of that dog. But I really do want to get a dog. Like I want a dog. Like I feel like a man needs a dog, bro. Man's best friend is a dog. I need one. But I'm not going to, like, there's no way I can take care of it, dude. I'm out like every other weekend. Like there's just no way I would meaningfully be able to spend time with the dog. It would be fun though to have a dog on the streams, dude. That'd be just cool. Get a cat. No, see, cats are not, let me say my words carefully because I don't want to offend everyone. Cats are, I don't believe in having cats as pets. I just think cats are not my cup of tea is what I'll try to say. Dude, all right, here, I'm scared of cats, bro. I'm scared. Not like how I'm scared of mice, but when I see a cat, it feels like they're going to try to kill me. Like, cats are felines, right? They're basically lions in a little miniature form. Like, I don't know how anyone looks at a cat and is not scared shitless when they see it. Like, dude, you're telling me this thing isn't scary to you? This thing is scary, bro. This is not like, does anyone agree with me here that like cats are like low key, like a cat running around your house? Like a dog is just like this cute, adorable. And then you have this cat who's just staring you down. Who's, again, if you take a cat to its logical extreme, it's a lion. And lions don't really get along with humans. I don't know. It is funny. I did have a cat for like a week back in 2005. My sister really wanted one, and so my mom got us one. But then my mom got scared of it and she returned it. So, okay, Bessent, he's live. Here we go. Bessent's live.
all right, from the G7. And we want to talk about that. But first of all, while you were up there, you might not have heard, the House of Representatives actually passed a bill, the tax bill you've been talking about for so long. Give us your sense of the scoring, as it were, on that bill, because I know you're concerned about the deficit. A lot of people are concerned it's not helping us that much in the deficit.
Well, David, I think this bill is very important because, as I've said, our economic policies, Trump had economic policies, really a three-legged stool. So it's trade, taxes, and deregulation. So this tax bill, first step, making it through the House, I think the permanence in the bill from 2017 is going to give, everyone's talking about, oh, there's not enough certainty now. Well, what I can tell you is this permanence is going to give great certainty. And I think the scoring, you and I have talked about it quite a bit. It's Washington style scoring, and it's not real world scoring. What I am concerned about, or have been concerned about, are we controlling expenses? Yes. Are we going to grow the economy and accelerate the economy and stabilize and then bring down the total debt to GDP? And I think this bill does a great job of that.
As you told us more than once, one of your goals is a deficit that's no greater than 3% of GDP. The scoring, the predictions on this bill as it's written right now is 7%, maybe 6.5% next year, not anything close to 3%. Now, you said we won't get there right away, but when will we get there?
Well, David, what I've talked about is something with a 3 in front of it by 2028. We didn't get here overnight. We're not going to get there tomorrow. But what we've got to do is change the trajectory and start moving it down. So, could we get down to a 6%, something below there with a 5 handle? Because what the scoring doesn't include, we have substantial tariff income coming in, so that's not included. We have DOGE savings in the hundreds of billions, that's not included. And then President Trump has made this very bold proposal on prescription drug pricing, which could save HHS substantial amounts of money. So none of those are included. So I'm very optimistic.
So let's include those for a moment here and start with the first one that you identified, which is tariffs. We've had some announcements even very recently about tariffs, maybe 50% from EU and 25% on Apple products. Is that motivation for that revenue? I mean, do you need those tariffs actually to go into effect to meet the numbers you need in deficit?
Not at all, because we have substantial revenue coming in now, and there is at some point there's an equilibrium rate, let's call it a Laffer curve for tariffs. And I think we will reach that rate. The other thing that's happening is a lot of their tariff barriers or non-tariff trade barriers. A lot of these non-tariff trade barriers are coming down, so friction's decreasing there. And again, because we don't know where these tariff negotiations are going to end up, they won't end up being scored, but it's several $100 million a year, several $100 billion a year of revenue that will be used. For every 100 billion, that's 100 billion less of bonds that Treasury has to issue.
When you talk about uncertainty and getting more certainty because of the tax bill, some of the uncertainty, a lot of it is because of tariffs right now, because we're not exactly sure where we're going to end up. Do you have a sense when the economic community, the business community, will get better certainty on tariffs?
Well, we've done the 90-day pause. As I mentioned several times, we have 18 important trading partners. So what everyone should really focus on are those. We've done a deal with the UK. My sense is over the next couple of weeks, we're going to have several large deals announced. We have put a pause and a 90-day pause with China. I expect that we will be negotiating in person with them again. And then the president today, when we initiated the pause and the 10% are moving down from the April 2nd rate to the 10% level was contingent on countries or trading blocs coming and negotiating in good faith. And I think the president was getting frustrated with the EU. You know, the problem with the EU, I've said several times, they have a collective action problem. There are 27 countries. They all have different needs. The Germans, they are interested in cars, the French in agriculture. So, and then you have Brussels negotiating with them. Now, I am very impressed. I met my German counterpart, who's part of the new German government, the German finance minister in Banff, that he was very responsive. I think that the new Chancellor, Merz, is going to give a opportunity for a U.S.-Germany reset. So I'm very optimistic that perhaps Germany can, help push the EU forward here.
Let's talk for a moment about something you know terribly well, have lived it your professional life, which is the markets. The bond market hasn't necessarily stood up and applauded with what they've seen out of Congress. Is the bond market wrong?
Well, I think the notion that in any movements in the bond market are being driven by the action of Congress is what's wrong. First of all, this has been a global phenomenon that the Japanese yields have moved substantially, German, UK, and David, if we go back and look, since either the beginning of the year or January 20th, when the Trump administration came in, the U.S. 10-year is the only yield that is lower today. So, all yields are up. And again, I think that was a coincident indicator. The market's very good at latching on to a story. So I'm not particularly worried about what the market's thinking, because, on the other hand, what the market also could be thinking is that this bill is going to create growth.
At the same time, you have things like the term premium up almost to 1% now, and you also have real yield up well over 2%. Should we be concerned with that? Is there a question here about the long-term ability to repay the debt?
Look, I think that, again, as growth accelerates, I'm not worried about the U.S. debt dynamics, because a change in the growth trajectory takes care of a lot of that.
Should we be concerned when we see yields going up on U.S. Treasuries and the dollar weakening? Normally, that's not the way it works, as I understand it. Is that something we should be concerned about?
Well, I'm not concerned about it, because I think part of it is we are seeing other countries step up. So I wouldn't, on many of them, I wouldn't necessarily categorize it as a weak dollar. It's for the first time in much of my career, Europe is actually going through a fiscal expansion. Back to this new German government, that they are opening the German purse for the first time, maybe even since the advent of the euro. They're taking off the debt brake. So the fundamentals are driving the euro. Japan is seeing a large increase in interest rates driven by the Bank of Japan. So, I think a lot of this is other countries strengthening, or other currencies strengthening, as opposed to the dollar weakening.
You have said you're concerned certainly about the deficit and getting it under control, and that President Trump, and just what you said, that's really a priority for him to get down to something with a 3 beginning it, at least, if not 3.0%. How high a priority is that? And let me push you on a little bit, like Mario Draghi. Will you do whatever it takes to get it to that level, so that if the present plan does not work the way you hope it will, you'll take other steps?
Well, I think what we've been trying to do, especially on the cost-cutting side, whether it's Doge, whether it's OMB, is go line by line. And on a lot of this, the Democrats are fighting us, the courts are fighting us. So let's see where that ends up. And of course, we can keep coming back in terms of making government more efficient. I think I've been there 3.5 months now, and I can tell you the amount of waste, fraud, and abuse is startling.
Yeah, I think most of us who have dealt with Washington would not disagree with that at all. The question is, where do you trim and how do you go about it? There was a $2 trillion number thrown out at a rally here in New York City, as I recall, by Elon Musk and Howard Lutnick. Was that a wrong number? Are you going to come close to $2 trillion out of costs?
Well, we'll see over what the scoring window is. Could we end up with 150 billion a year in savings? Over the CBO window, that'd be $1.5 trillion. So.
But you're on track, you think, on the cost-cutting side?
Well, again, there's a lot of resistance that the Doge and Elon were criticized for the pace they did. But I tell you, just in my 3.5 months in Washington, if you don't move fast, then the swamp kind of grabs you and you start sinking, and the vested interests kick in.
What other tools do you have in your toolbox to apply to the deficit if the present plan doesn't deliver all that you hope?
Oh, look, I think it's why don't we wait and see how this works out? Because I think we can see, as I mentioned, it's a three-legged stool. So I think it would be the third part: trade, tax, and deregulation. So deregulation is the slowest moving part. I would expect that to substantially kick in to the economic growth in the third, fourth quarters and really accelerate next year. Also, one of the most powerful economic parts of the tax bill is the immediate expensing of capital goods, 100% for capital goods. And what we have added to that is 100% expensing of factory structures. So I think that could really accelerate the growth.
And as you look at this problem right now, what is your approach to making sure that we bring the U.S. economic machine into line, and particularly the business community and investment, most importantly?
Well, let's talk about two pieces. But so before I was with you just now, I was with a group of community bankers. So we are doing a substantial amount of financial deregulation to make sure that the benefits are more evenly distributed across the U.S. economy. That, as I said before, Wall Street's done great. Now it's time for Main Street to do well also, and they can both do great together. It's not an either or. So when I was with these community bankers, they were talking about the substantial amount of regulation that's been crushing them over the past 10, 15 years, and a huge amount of small business loans, huge amount of real estate loans, ag loans are made by these community banks. So we are really focusing on that. On U.S. business, we want to make the U.S. the most attractive location for capital. You and I were talking, I was just with the president in the Middle East. We were in Saudi, we're in Qatar, and we're in the UAE. And there are trillions of dollars that are going to be pushed into the U.S.
One form of regulation that gets a lot of attention in New York and on Wall Street is banking regulation. Let's talk about the supplemental leverage ratio, which seems like an obscure thing off to the side, but it has been the subject of much discussion. And it does, as I understand it, relate to U.S. Treasuries and yields on U.S. Treasuries, so that if major banks held more U.S. Treasuries, it would bring yields down. You've said you're going to take more of an active role, as I understand it, with respect to some of that banking regulation. Where are we with that?
I think we are very close to moving the supplementary leverage ratio, SLR. That is moving along very quickly between the three banking regulators, the Fed, the OCC, and the FDIC. So I would think we could see something on that over the summer.
Over the summer, and knowing the markets as you do, would you anticipate that might have a significant material effect on Treasury yields?
Well, I think it could, because banks are being penalized for holding treasuries. There's a large supplementary leverage charge. So I think for holding the risk-free asset, we can reduce that. And I've seen estimates that it could bring yields down by tens of basis points. Certainly during the COVID crisis, it was the temporarily taken off, and it had a big effect.
Let me ask something different, but I think might be related, which is stablecoin. If really we went big into stablecoin in this country, what effect could that have on the strength of the dollar? Because people might have to hold dollars in order to match against it, or even for treasuries.
Well, we are going big on digital assets. So Trump administration has made digital assets a priority. Past administration starved and almost made extinct a lot of these companies and pushed it offshore. So what we want to do is apply the highest U.S. regulatory and AML standards to digital assets, especially stable coins. And I've seen estimates that just over the short term, stable coins could create $2 trillion of demand for U.S. Treasuries and Treasury bills. To put that in context, the number is probably about $300 billion right now.
There are reports, including on Bloomberg, that there may be, if I can call it, privatization of Fannie Mae and Freddie Mac, something that's been talked about since I think they were nationalized, essentially, during the great financial crisis. I heard the president say, I'm going to ask Scott Bessent about this. So has he asked you, and where does that stand?
It is a goal for this administration. Again, we're doing peace deals, tax deals, trade deals. So as we land some of those deals, then we will focus on that. But David, what I can tell you, we are doing a great deal of deal of studying at Treasury, because the one requirement for this privatization is that they are privatized in such a way that mortgage spreads do not widen. And in fact, is there a way that we can make the spread between the risk-free rate and mortgages tighten as the Fannie and Freddie are privatized?
That was exactly my question. So do you know the answer to the question? Is there a way to do that? Because most people are concerned that will drive up mortgage rates.
Sure. There are several ways to do it, and we're exploring it. So we will move forward. Again, after we land some of the peace deals, trade deals, and tax deals, then we will work on this privatization deal.
One of your many responsibilities has to do with taxation and the IRS. I know that you are really pushing hard for monetization of the IRS. At the same time, we've lost a lot of people at the IRS. Isn't that hurting their ability to do their job?
So, David, my three priorities: collections, privacy, and customer service. And if we look over a long view, we haven't lost a lot of people at the IRS. There was a massive headcount increase from the Inflation Reduction Act, and back to this crazy CBO scoring. By increasing expenses, there was the scoring that you would actually somehow up collections, which didn't happen. So we had a great collections year this year. Came in above target, and this modernization program, the tech modernization program at the IRS, was begun in 1990. The young man who was in charge of it was not, who I put in charge of it, was not even born then. So that it's 15 billion over budget. It's $3.5 billion a year budget. I think it's running on COBOL, which is what I may have learned in college, on 12 different systems. So we are going to fix that. And I think all three of my priorities are going to be served. And I think it could be substantial savings to the American people, because the IRS roughly processes as many transactions as a mid-sized U.S. bank, which does it at 10% of the number of people, 10% of the cost.
President Trump said a while ago, posted actually on social media, that they were in the process of removing the tax exempt status from Harvard. There's been a lot of issues with Harvard, but that's one that comes within your bailiwick. Where is that process right now?
The president is moving forward with that. And we're also looking at taxes on endowments. And I think the important thing here, and it goes a little bit back to this Main Street versus the elites, that Harvard, to have a tax exempt status, there are rules you have to follow. And if you're not following the rules, no one's above the law. So we will see if they're following the rules. It looks like there's a substantial number where perhaps they weren't. And, again, too, Harvard is a gigantic hedge fund. They run a leveraged investment model. So we'll see where all that goes.
Is it Harvard alone, or are there other universities or colleges that also might be subject to review on tax exempt status?
I haven't seen that, but again, back to cutting government expenses. These things are more out of control. The universities, they are more out of control than the government. That there is a separate inflation index. It's called like the Index of Higher Education Inflation Index, and most of the expenses have grown at CPI plus 3%. So, they need to get their houses in order.
Let's come back to Banff, because you just got back from the G7 meetings. And the communique, as I read it, really focused on imbalances. What were the imbalances you're most concerned about?
Well, I think the group as a whole was very concerned about the global imbalances around China, that China just keeps increasing their share of global manufacturing and has not done a much needed adjustment in terms of consumption. And as I predicted, I normally don't like to take victory laps, but I did predict it, and I was right. I said when the US put up the tariff wall, that all those Chinese goods would go somewhere. And I think the G6 has seen that these Chinese goods are starting to permeate into their economies. They're quite worried about it. But there's a whole series of global imbalances. We have a large trade deficit with the EU, so we'd like to see more pro-growth consumer spending there. And but the real thing, when I think about China and the rest of the world, especially the US, in the US, we are trying to rebalance towards more manufacturing, mostly high-end manufacturing, not the kind China has. Everyone agrees that China needs to rebalance toward less manufacturing, more consumption. And is there a chance that we could do it together? What Ray Dalio might call a big, beautiful rebalancing.
So as I understand, I'm not a macroeconomist, as you know, but so as I understand it, when you have these trade imbalances, it means we're importing, buying more things, and we're exporting dollars, essentially, overseas. A lot of those dollars have been coming back to us in various forms, particularly in U.S. treasuries. Can you have a rebalancing, for example, with China, or with Europe for that matter, that doesn't necessarily raise the yield on treasuries because there are less dollars overseas to be invested in U.S. treasuries?
Oh, sure. I mean, these balances weren't always like this. In 2000, before the China shock, we've historically had big inflows into treasuries. But what used to happen was in the old days, trade would come in and then we would sell the other country a GM. Now we are selling them either a treasury bond, private equity, or Google stock. And that has a lot of distributional problems within the US. So that's how we've ended up with the coast or Wall Street doing very well, middle of the country, manufacturing being gutted. So, I think it's the composition of the flows coming back in. And then, as you mentioned, I think we can see more bond buying by U.S. citizens, U.S. institutions. But the other thing that I will say is, I have access to the data, and we've actually been seeing foreign national entities, whether it's reserve managers, sovereign wealth funds, or pension funds, have been
Okay, now I think it's back. Hold on. Okay, can you hear me? You hear me? Are we good? I don't know what just happened. It became really weird. Okay, I think we're back. I don't know what just happened there. Let me see if I can get Bessent. But yeah, I think we're back. I don't know what just happened, bro. That was weird. I don't know if it was internet or I don't think that was internet. I think that was the tariffs or something. Like, hold on. I think I'm gonna get Bessent live again. All right, here we go. Here we go. That was weird.
Everybody wants to come here.
So as you look forward, what is the thing that worries you the most?
That we are not able to, that somehow our agenda gets slowed down. That whether it's the courts, whether it's the Democrats, that's really what worries me the most.
And on deregulation, how long will it take till we actually see it in productivity?
Well, I think we're going to see it in the economic numbers in the third and fourth quarter.
In the third and fourth quarter of this year.
Yep.
That's fascinating.
Yeah, because again, that when you ask me what worries me is this. Look, we need this substantial permitting reform, that we aren't able to build things, that we have, because of this AI boom, we're becoming the AI superpower. Well, that's going to take a lot of electricity. So you're going to need energy pipelines. You're going to need transmission. And the fact that that it takes 3, 6, 7 years for the permitting. So what worries me is that somehow we get bogged down in a legal morass, because this administration is really trying to get America back to building again.
One of the things that people are interested in is the sovereign wealth fund. I remember, actually, as I recall, seeing President Trump sign an executive order with you in the Oval Office.
Yes.
And talking about it at the time. Where does that stand right now? Because some people say, if you're really going to try to build the wealth of the United States, you're better off cutting the deficit than borrowing money to put it in a sovereign wealth fund.
Yeah, I think the president decided that it's on pause while we work on everything else that we're doing now. So, and he said the other day that we'll probably spend more time paying down debt. He is laser focused on paying down debt.
And you're prepared, if it doesn't go the way you want it to do other adjustments to make sure we are paying down the debt? Because some people are a little skeptical.
Well, again, David, let's talk about can you grow the denominator faster than the numerator? Like the reason we got here was, think about taking out a home mortgage. It's fine if the value of your house is stable or growing faster than the debt. What's happened is, that previous administrations took out a big mortgage. We didn't grow our way out of it. Now, I actually think that there is a chance that we can constrain the spending, up the growth, and that changes the trajectory. Because going back to this CBO scoring, which is alien to anything that makes sense, that if you cut taxes, they still score growth at 1.7, 1.8%. If we raise taxes, and if this tax bill didn't go through, it would be the biggest tax hike in history, then growth stays at 1.8%. So, I think that we can accelerate growth here. So, my worry would be that somehow there is a glitch and the tax bill did not get passed soon enough. So, I would encourage our colleagues in the Senate to push for the July date that Leader Thune has.
Last question. Growth is critical to your approach and the president's approach. What growth are we talking about? What are you projecting? And because right now we're not close to 3% growth.
Look, I think we can get to 3% pretty quickly.
Well, okay. How quickly is pretty quickly? Months, quarters, years?
Quarters.
In quarters, we'll be at 3%, you believe?
Yes.
Sustainable.
Yeah. Look, I think we were in the middle of, as I talk to industry, this U.S. innovation edge, we are starting to see real productivity increases like no other country is. I think with the deregulation, with the certainty from taxes, and with this full expensing, which from 2018, 2019, going into COVID, for the industrial economy really gave it big impetus. So, I'm expecting that by, certainly by this time next year, we will be north of 3, and that we will be turning the corner toward the end of the year.
Mr. Secretary, I can't thank you enough for being here. I really appreciate it. That is the United States.
All right, that's it. That's it. I think 3 hours into the stream, the connection is saying it's time to go. I look like a potato right now, so I think that's time to end the stream. TLDR, what Bessent said is, don't worry about the bond market. We're going to grow. We're going to get to 3% GDP. We're going to cut your taxes. The deficit's not going to matter as much as the growth, and that will be enough for the markets to relax in terms of the stock market, and also enough for the bond markets to react. So that was a long interview. I don't think they really said anything new. He didn't even ask about the 50% tariffs. If I didn't hear it correctly, maybe I missed it, but I didn't get that question. It was more so about the bond market. It was about SLR ratios, which is really good because that means banks can start buying more bonds. And he did say that by the end of the summer, they think those regulations can clear up, which is bullish. And then in terms of the deficit spending, Bessent, again, going back to his main talking point that we will outgrow the rate of growth in our deficit via our GDP, via deregulation, tax cuts, innovation, all this stuff, manufacturing. And as a result, we should get back to 3% GDP. Yeah, he didn't ask about the 50% tariffs, right? I didn't hear it at all. That's weird, bro. Even the media kind of not acknowledging here. It's like no one's taking that seriously. Bessent did say about Europe, though, that the EU works like a collective because there's a lot of countries in the EU, and that he thinks they need to be a little bit more individualistic in terms of how they think of different trade partnerships with the US. He mentioned that he was with the Chancellor of Germany yesterday, and that Germany might push the EU to get closer to a deal. So I think Trump's 50% threat, obviously in the stock market right now, no one cares. Markets are flat. S&P's down like 0.5%. Doesn't matter. Bond yields have actually calmed down this morning. People are kind of chilling from that perspective. And then the idea that we would actually tariff the EU 50% or Apple 25% in India, I just think most people are starting to not believe that anymore. And that's why, whether it's credit markets or the stock market, they're just not really reacting to it the way we're seeing it right now. So there you go. That's what we got. That was like a 25-minute interview, and really it wasn't like that. It wasn't that crazy. I mean, there wasn't something that I don't know what the street exactly was looking for from that interview, but we didn't get any big headlines that matter outside of the fact that Bessent, on his same talking points, we will grow GDP to 3%. We inherited a 6.7% budget deficit to GDP spending, so it's like not really our fault, and that ultimately the big beautiful bill will lead to more growth long term in the States. And that's what we got from Bessent. The most exciting part of that was the stream freezing. The most exciting part of Bessent talking was the stream having some issues. But yeah, that is pretty much it. All right, cool. So that's it for me. I'm gonna get out of here. Word of the day is edify.
Edify.
To instruct, especially morally or spiritually. The fables about trickster animals were meant to edify people rather than simply entertain them. The gallery was curated to edify visitors who came in with an open mind. To instruct, especially morally or spiritually. Bessent tried to edify the markets, that's for sure, just now. And, you know, he didn't do the worst job. S&P's flat. Market's not really getting hit that bad. We'll see on the market close if things do take a worse hit. S&P's now down 0.92. At one point, it was down 0.6. So if we end red for the day, I don't think that would be too crazy. Him still up 1.3%. Pouncer at 122.40. NVIDIA down about 1.3. Pouncer basically up 0.09%. It wouldn't surprise me if we go flat for the day. It wouldn't surprise me if we go red 1%. Also wouldn't surprise me if we're down like 0.5 and the broader market's wouldn't struggle as much going into this longer weekend that we have right now. All right, I'm back to being a potato, so I should leave. Boston meetup is happening tomorrow. So we're doing the market close today, and then I will be heading out to Boston, Massachusetts. Beautiful state name. Via FSD, and I'll probably be updating my journey on Twitter going from Jersey to Boston. So that'll be fun stuff. We'll end the market close a little early today. No Pouncer Weekly tonight. And then on Saturday, I will see anyone who's headed over to Boston for the meetup. All right, cool. That's it. Thank you, everybody. Appreciate it. If I don't see you on the market close, have a great weekend. We will not be live for the Sunday Future Show because there is no market open on Monday. We will not have a market open or market close on Monday. So next time I'm going to see you guys in like 3 days. So taking a little bit of a break, I guess, because of the market. Maybe we go live on Monday regardless. Maybe we go live. We'll see what we do on Monday. I don't think I've gone 4 days without streaming in like a long time. So yeah, we're going to have to see how this plays out, but I don't know, dude. I have a little bit of separation anxiety, so I don't know if I could do this. Oh, Zach, thank you. I just seen your super chat. Just wanted to thank you for being here every day, level-headed. My port took a big hit on the way down, but I've tripled my account from the lows, and you definitely played a part. Please, for the love of my port, keep it up. Zach, thank you for being here. Thank you for the super chat. And again, it's a community effort. All of us coming together to share due diligence. As Kris was saying, all of us as retail investors. And, hopefully everyone's able to benefit from that. So thank you, Zach, for being here. All right, guys. 3:45, market close. I'll be back. And, we'll figure out if we go live over the weekend, because that 4 days is a long time to be away, bro. That's a long time. But I am going to see you guys on Saturday, at least in person. So I'll be posting pictures and all that stuff from the Boston meetup. All right, everyone. I'll see you guys on the market close. Bye, everybody.